child to understand your thesis, you can explain it to anyone. If a child can't understand it, it's way too complicated. Make it simpler.
Repeat these words. I'm not afraid of being poor. I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
Very excited about it.
Without a doubt, the number one value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise, you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn, like the knowledge, and it's an abundance mindset versus scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. The incentives to be in it they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. And the quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
The nice cars, the office views, the investor calls that finally get returned. But they don't see the climb, the uncertainty, the setbacks, the silence after the pitch, the nights filled with doubt. We did, because we were there every step of the way. We provided the tools, the structure, the strategy. But the effort, that was all him. Everyone else sees the success. We remember the climb. This isn't a guarantee. It's a glimpse at what's possible when someone takes the risk and shows up anyway.
Hello. What's going on, y'all? Welcome on today's call. We are going to be diving into the hardest questions you can ask us today for today's call. Should be pretty fun. We've got a team of panelists coming on right now. So we have Lincoln, Adam, and John. Let's make sure they're queued up on the back end. In about 2 minutes, we're going to start going. So if you have questions, what we're going to do, type them in the chat. Also, we're going to promote some people live to come. If you have your camera on, you can come talk to me face-to-face. We'll do kind of a hotline. So my team will queue you up in the backstage. They will bring you to the front of the stage. You can ask a question, and I want to answer whatever the hardest questions you have for funds. Does that sound fair? That's the plan for today. So welcome on, y'all. Let's do this as we get in. And if Christian, can you grab my iPad? It's on my desk charging. I forgot to grab it. So now as we get in, welcome in, y'all. If you can, type in the chat where you're calling in from. That'd be awesome. If you're on other channels, if you're on YouTube or Facebook or somewhere else, you're welcome to stay there, or you can come join us on the Zoom call live, and you can actually ask your question live to me if you want as well. So thank you for grabbing that. It is funlaunch.com/hub. That's the redirect link, funlaunch.com/hub. If you can share my screen, it should be plugged in for you, Briggs. There we go. So my name is Bridger Pennington. Today we're gonna ask us tough questions on investment funds. Okay, that's our title for today's call. We're gonna do a few giveaways today. For people that are already live, welcome in. Type a yes in the chat. I'm gonna pick someone live for AirPod Pros. So type a yes. I'm literally gonna pick somebody right now, and I'll even show you my screen. Heck, here we go. There's our backstage. I'll make our chat bigger. You can even see my screen. We're gonna make it transparent here. Type a yes in the chat if you're live. Okay, you can see him coming here, and I'm gonna literally pick someone live. So type in yes. I'll give you a second. There's a little bit of delay on this, so type a yes. Type a yes. 5. You can type it multiple times if you want. There we go. Okay, 5, 4, 3, 2, 1. All right, let's get. Oh, it's coming in too fast. Let me stop on somebody. I got Devin's iPhone. Devin, we got free AirPod Pros coming your way. Okay, Devin. So there you go. You've been on for just 2 minutes, and here we are. We'll do more of these as we go. You guys get the gist. I'm gonna be looking at this chat. This really is a live stream. I will be watching this and answering questions from this. Okay. So congrats on getting AirPod Pros. If you message my team, like I think Christian on my team, send him your email and a private message, and he will send you those AirPod Pros. All right. As we dive in, so we're gonna queue up our guest speakers. If we well, let's get them. Actually, you can. Well, give me 1 minute and we'll queue them up. I know they're getting their cameras on and everything set up. So start dropping questions if you can. If back to where'd it go here? If you're in here, type them in the chat. You can also use on my screen. I get this Q&A window as well. Oh, hitting the wrong buttons here. You can see I'm just showing you the full back end here. So here's our Q&A window. If you come and drop Q&A questions in here, this is what I will use. You'll see it on Zoom. Currently, there's no Q&A questions. So you guys have been asking questions in the chat. Come over to the Q&A button and put it in here, and I'll answer them live. And we'll have our whole panelists, a group to answer them live. Here we go. Perfect. This is great. I'll hit these in just a second. So now as we're queuing these up, tomorrow this ends. So people that are in our community, in our group, welcome on, y'all. Good to see you guys here. The Black Card promotion cycle we've been doing ends tomorrow. Tomorrow at midnight is our final deadline. This is our Black Friday discount, something we've never done before. As the top of our screen, you can see, we have literally redeemed 3.929 million of 4 million Black Card credits redeemed. Our original goal was 1 million. We blew past that the first day. And so we decided to up the goal to $4 million of Black Card credit, which is a crazy goal. It's actually, this is not a lie, that we are truly about to hit it. We only have, how this works when you book a call, there's a link down below. So funlaunch.com/7K off. When you book a call, it redeems your credit when joining for Black Card. And then you can decide if you want to join Black Card, but that's how we've counted our credits, is when you book a call, that's you redeeming and claiming that credit though. However, these all go away tomorrow, okay? Tomorrow is the last day for this. If you're unaware of what we're doing, in 1 minute or less, is that cool if I just shared in 1 minute or less what we're doing? Black Card is our 4-phase program to help someone build and launch a fund. That's what we do at Fund Launch. See, this is a screenshot of the back end, how the platform looks. You can see here, we have the incubator, the coaching calls, all the stuff's included on the back end platform, custom built by us. We have 30 plus coaches in Black Card. You're going to meet 3 of them, including me. It's 4 on today's call. These are coaches in Black Card that also, almost all of them currently run their own funds as well. I'll introduce them in just a second. We have 50 plus office hours per month. You get a pitch deck designed. This covers the legal fund formation costs. You can see it's usually 30 to 50 grand for that. Brightstar says 40 to 70 grand. ChatGPT says 50 to 100 grand. This is included inside of your Black Card membership when you join. You also get the mastermind. We have Slack community access, capital committee, and Fund Launch partners that looks to invest into members of Black Card. Now, no guarantee, but we try to invest and partner and get capital to as many good Black Card members as we can. We also throw events. When you join Black Card, you get our annual events pass. We have our next event coming up at my headquarters in Salt Lake City, Utah in January. So when you join by tomorrow, you get actually a ticket to come out and be with us for 2 days with our coaches and our staff and myself to break down your fund. So again, there's the Black Card Fund Incubator, 4 phases, one-on-one coaching, office hours, full fund legal. You also get the mastermind, the Black Card workshop events, Slack channel capital raise events, and then finally the tools. So the tools include 50 plus partnerships in Black Card, things like capital raising partnerships or tax and audit, marketing and PR, investor database, insurance, series licenses, admin, and events, just to name a few. For example, we did a partnership with Carta. If you know Carta, the fund administrator, all Black Card members get 20% discount on Carta's platform for their first year. This is the first partnership Carta has ever done like this, and it's with our Black Card members. You also get Fund Launch 360, a full marketing back-end platform to send emails, texts, build your website on, is all included inside of Fund Launch, okay? And again, coming soon is Fund Launch AI. We're pretty excited to launch this, and we should be live here in a number of weeks to give this all to Black Card members. So you get the incubator, the 4-phase program, the office hours, the personal account manager, the full fund legal, the mastermind, the workshop events, cap raising tools, Fund Launch 360, partnership discounts. This is what a Black Card member said. The price of Black Card is worth every penny. If you skip down to the next red line, I would have saved the $15K if I found him sooner. If you're serious about a fund, there's no better alternative than this. So Black Card approximately is $35,000, depending on what you want. You can build a custom package, so it's lower, it can be higher than this, but let's say approximate cost for Black Card. What we've done for this, we've never done this before, is an actual discount. You can see my golden ticket here. So we dropped this 2 weeks ago. Tomorrow is the final day. This all goes away. So for example, in this case, you would just take $7,000 off the bottom and you'd be at $28K. But again, you can look at your package. If you don't have partners, that takes things out. If you don't want the events, you can take that out. You can actually build a custom package for you that gives you an example of what we're doing with Black Card. Furthermore, by tomorrow, for people that join, we're going to give you a month and a half for essentially for free. Black Card's usually a 1-year program. We're going to push your start date to January 1st. So essentially you get 13 and a half months inside of Black Card instead of 12 months. We also have interns that we will look to place into your funds. And then finally, you get a ticket to our January 29th and 30th event in Salt Lake City, Utah. We'll do a little bit of skiing as well. We'll have a little bonus ski day for that. Furthermore, we did something we haven't done in a long time, which is where you can start for $5,000 down. So you can join a payment plan. There's 0% interest, $5,000 down to join Black Card. All right, that's how it works. There's a fundlaunch.com/7K off. We'll leave this live passively as we do Q&A today. And you go book a call. I would book for today or tomorrow. This all goes away tomorrow at midnight. You can still join Black Card. You just don't get 7K off. So if you want $7,000 off the bottom, tomorrow's the day to join. All right, sound fair? That's it. We'll leave this up though. Right now, you'll see as you book calls, you'll see our little counter at the top. We have 11 call spots left to put us to $4 million, which should be pretty fun. All right. With that, without further ado, today's topic: ask us the hardest questions you have about launching a fund. We're going to bring on our panelists right now. And I'll introduce them as they come on. So if you can actually just push them all to the front stage and pin them or promote them to panelists. Today, though, we have 3 amazing guests. Number 1, we have Mr. John Pennington. You can see him there. John is actually my brother. He's also an investment funds attorney. And as of recent, we have just hired him full-time at Fund Launch. So John, as a coach, he's worked at the largest law firm in the world in regards to investment fund management and launching. He's done some incredible launches with funds, some huge, massive funds, was a former chief compliance officer, and has done extremely well in the legal world. He's a licensed attorney in New York and a few other states as an attorney. So we have an attorney, and he's also a coach inside of Black Card, does an office hour and helps people with legal questions. Now, disclaimer, today is not legal advice, but we can get at least consulting help from John on some tough legal questions. So if you can in the chat, give John a virtual round of applause. Good to have him here. Next up, we have Mr. Lincoln Archibald. Lincoln is my partner at Fund Launch Partners, also the CFO of Fund Launch. Fund Launch Partners, Lincoln led the raise. They raised oversubscribed this fund last year of $30 million. It's a GP stakes fund. This fund invests into emerging managers. In the last 12 months, we've done 10 deals, and we look to invest into Black Card members. So when Black Card members start launching their funds, if we find a good manager we want to partner with and invest into, we try to partner and invest into them. Our average commitment is about $1.5 million. We've done 10 deals. We have 3 more under LOI right now in our Fund 1. We're looking to raise our Fund 2 next year to continue to pour into our Black Card members. I believe of the 10, Lincoln, correct me if I'm wrong, 7 of the 10 were Black Card members. Is that correct?
Yeah, that's right.
So 7 of the 10 were Black Card members, and we look to do more. And then finally today we have Adam Campbell. So Adam Campbell has formerly worked at a number of amazing firms. He worked at Bridge Investment Group, was one of the first employees there. Also was at I believe the CFO of a family office, has a master's of accounting. Also did a Harvard Business School stint on business analytics. And Adam also is a partner with us on Fund Launch Partners as well. So Lincoln does more of the front end. Adam does the back end. So if you partner with us, Adam is the one in the weeds doing accounting, administration, setting up your audits, working with all the stuff that most fund managers dread. Adam is amazing at and says, I'll take that on. We'll do it. So Adam's an amazing person on today. So this is our panel today. We're going to try to answer the hardest questions you have for us. Now, in full transparency, we are all in the same office right now. They're just Lincoln's across that hall. John is just over here, and Adam's down the hall as well. We just all couldn't fit in my studio, so I had them just call in from their desks. But they're all right here. We are in the office together pretty much every day. It'd be good to have them on. My background, I'm also a partner on Fund Launch Partners, and I run Ugly Unicorn, about a $25 million hedge fund in crypto. So I bring some of that expertise as well. And I've ran funds prior with Blackbridge Holdings, and then also the face and founder of Fund Launch. All right. So today we're going to dive into questions. Christian, do you have anybody queued up? We have some in the chat, I know. If you have someone live, just give me a thumbs up, and we're going to bring them on live. Thanks to our panelists. I'm going to bounce some of these questions around to our panelists. We'll try to keep them concise to be able to hit a lot of questions today, but that's the plan. All right, let me pull up a question here. Oh, perfect. Okay, I got him right here. Got to zoom in my thing. I got my eyes checked yesterday, and I had to get here. Okay, Jeff Wayne, can a self-directed IRA participate in a hedge fund or invest into that? It's a great question. I'm going to kick that over to John, my brother. So, John, can a self-directed IRA participate in a hedge fund? And feel free to opine on that.
There we go. You all hear me?
Yeah, we can hear you.
Good. Awesome. Yeah. So IRAs can be tricky. Depends on what the structure is with that. Some self-directed IRAs can be put into investment funds, and others can't. It just depends on what you have and what you don't have within the fine print, right? So it depends, and I hate to give that answer, but you'd have to look in the finer language of things. But oftentimes IRAs are put into that, but there are limitations on the funds or the amount of IRA money that can come into funds. There's a thing called ERISA, and typically funds don't want to be fiduciary responsibilities of ERISA funds, and so there's usually a cap on how much ERISA or retirement money that can actually come into an investment funds. And usually that's capped at about 25% or just under 25%. And so sometimes if you get into a fund early, you might be okay, but sometimes later when the fund has raised enough capital and enough money from just regular investors and from retirement money as well, they reach a cap. And just for example, I was with one fund group at a few years back, and they were at 24.5% of ERISA money that had already come into their fund. And so they were turning down money just because they couldn't put into their private fund. So if we're talking about private funds, then they have that cap, but there are some exemptions, but generally that's the rule.
Yeah, great answer. So again, this is asking, can retirement money come in? Yes, the answer is yes, and it's capped usually at 25%. Like my fund docs say in there explicitly, we can take retirement money, but it's capped at 25%. So great question. I don't know. Did we have a challenge today, by the way, if we had the hardest question, like won money or something? If you guys ask us the hardest question, we'll do that. I know there's money to be given out. Whoever has the hardest questions, ask them. So, and again, if you're on other platforms, come to Zoom if you can, fundlaunch.com/hub. All right, let's keep going here. Okay, what is your best advice for going at it alone and raising capital before you have your other roles filled? And best posture you raise as an emerging manager with that scenario? So, question around raising capital. Lincoln, I'm going to kick this to you. Lincoln has done a great job raising capital with Fund Launch Partners and helping our other portfolio companies raise money. So, Lincoln, what's your best advice for going at it alone and raising capital before you have your other roles filled in your fund? And maybe you can take that in a couple directions, just raising capital in general, and then this also is talking about getting the roles behind you. Any comments there, Link?
Yeah, I feel like half of fundraising is just making sure that you have a good story and that you can keep momentum strong. So I usually say to people, you have to keep the story alive. I mean, you really have like a 2-year window to go out and raise money before other investors lose interest in your project or appetite. And unfortunately, the way the world works is social proof is part of the story, right? And so investors want to see other investors subscribe to your projects, and they want to see depth and experience. So I think you certainly, as you're starting out, you just need to have a good story, say why, you have a fundamental right to win in the space that you're operating. What gives you the right to, do better than the competition down the street. And if you can keep that going, go build yourself an advisory team, go build yourself, partners, go get some deals done. You don't have to start with a lot of money, right? You just go get deals and performance, and keeps the momentum going, keeps the story going. And pretty soon you'll find yourself, fully subscribed, oversubscribed in your fund. So it's just
tell us a little bit more about that for a sec. I think some people, okay, I'm going to go raise a $30 million fund. I've got to raise the full 30, and then I can start doing deals. And that's not the case. A lot of times you do closing, you do a first closing, second closing, third closing. You start doing deals, like you said, with not a lot of money. Maybe walk us through the mechanics and even Fund Launch Partners, what you guys did with those closings.
Yeah. So, I mean, look, an institutional caliber manager, okay, if you're spinning out of Blackstone or whatever, and you're launching your first fund, most of the time let's say you're raising $100 million. The institutional process is you don't even launch your fund. So you don't take down any assets until you're, at least 20%, but probably closer to 50% subscribed. So that means you need to raise 20 to 50 million to get started. And then you'll push and you'll do, another round of fundraising until you get to your final close of, let's call it $100 million. For most emerging managers or non-institutional managers, which I would guess are, the majority of people on this call, you're probably not trying to raise, over 100 million or over $1 billion. You're probably trying to raise 10, 20, 30, 50, 80 million dollars. And what I usually tell groups to do is just go raise enough money to do a deal on your first close. I mean, you absolutely need to be sensitive to load cost, and you need to make sure that your docs are written in a way that allow you to do that. But what that does is, so like on our $30 million fund, our first close was $1.2 million. That's all that's all the capital we had committed when we launched our fund. But that allowed us to go and make two investments into our strategy. And guess what? All I did for the next 6 months was go sell those investments to our investors, right? To prospective investors. Look at these deals we did. Look how great they are. Look how they're trending. Look how they're tracking.
We're already in motion. Things are already going.
Yeah.
We got 2 deals under. We're doing a second closing. Yeah.
So you're just kind of building that story on top of each other. Oh, look at this great advisor we brought in, right? Look at this new partner I brought in. Here's another deal that we just did, right? We raised a little. So like our first close was 1.2. Our second close was 3.5, ballpark. Our third close was like 8.5 million. Fourth was 20 million. And then we closed it off at 32. And so it's just kind of, building up to that. So it took us from first close to final close was about a 12-month process for us. But look, sometimes it takes longer. Sometimes it can take years. I just got off the phone right before this call with a venture manager out of New York, and she's on her final close at 20 million, and she's been on market for 2.5 years, right? It can be a long time, right? I've seen also on the inverse, I've seen managers raise and close their fund in 3 months. If you have a really good product and a really good approach to market, I've seen it happen. So maybe I'll stop there, but.
Yeah, well put, Lincoln. And I'm sure we'll circle back to more cap raising questions. But yeah, good questions. And by the way, if you have questions, drop them in the chat or Q&A. Q&A is easier for me. Also, if you want to come live, just in your question, say, hey, I can come live. Have your camera ready. Christian and Adam will queue you up in the backstage and then bring you on live for a question. I've got 2 quick questions on Black Card, and then we'll go to Adam with a question on costs, load costs. So, question, what are the costs after 1 year of Black Card? Typically, we go to Black Card is a lifetime product. We have an evergreen long-term product, but if you want the full access to everything, it's $883 a month. So whether you pay that or not, you're still in You're part of the Black Card family. Once you join, you're in forever. But if you want the full toolkit and everything, it's $883 a month after your first year. And then do we help with Canadian funds? Yes, we have 2 Canadian, well, 1 Canadian coach now and a law firm as well that helps Canadians. There. And then where is the Black Card retreat this year? The next one coming up is in January at our offices. So these are all great questions for our team. You can book a call at funlaunch.com/7K off. Tomorrow is the deadline though. So go ask my team. They're taking calls all day and tomorrow. Tomorrow's the deadline to get all the cool bonuses and perks. All right, let's go. This is from Devin's iPhone. Did Devin win the prize too? He did. Devin won the prize and now is answering a question. Well done, Devin. All right, so Adam Campbell, this one's for you. What are the initial startup costs? Do the different investment amounts bring back different percentages? Do you have different terms, 1 year, 5 year, 10 year? This would entail limited liability partners getting monthly returns and investment back when the property is sold. Correct. So to summarize, let's start with startup costs of a fund. How much is, Black Card costs something, but how much does the stuff take to run a fund and manage it, and who pays for that? Adam, you want to take that?
Yeah, for sure. And I'd probably say one of the biggest expenses you're going to find launching the fund is just that initial legal, getting together the PPM and the LPA. And if you go out in the marketplace, it can run anywhere from $30,000 to $50,000 to pick up those documents just from an outside legal firm. So within Black Card, it actually saves a lot of cost just on that one line item alone. But some of the other things that you'll see is there's a lot of blue sky filings. It could be $2,000 to $5,000 for that first fundraise period for the full year. You're going to have a third-party admin that we highly recommend. And on the low side, those probably run about $15,000, give or take, to maybe $20,000. There's some really great vendors that are doing some economies of scale for some of the smaller managers. And those can quickly go up to probably $40,000 on the high end if you're looking for it. There's some that are $100,000. Ignore those. Those aren't what you guys need as emerging managers. And then there's going to be some initial tech setup. So you might have some subscriptions, some CRM systems, a couple of different softwares that help enable it. But outside of the legal, if you're doing that with Black Card and you kind of put that aside, the initial first run to do the hard cost is probably somewhere around anywhere from $25,000 to $50,000, depending on what you're looking to do. If you're really tightening your belt, you can do it for $25,000. The next thing that you look at is really just fundraising. It's, do you have enough capital to go do the meetings, do luncheons, fly around the country to meet investors, fly around the country to find assets that you're looking for? So having a war chest for that travel and investor relations, I'd look at it and go, in the first year, if you've got another $25,000 to $50,000 that's kind of reserved, and maybe you've got that coming in because you're doing a couple of deals and you're making the money and use that revenue to be able to do the travel, or maybe you saved it up as well. Either way totally works, but that's probably another $25,000 to $50,000 that you'll want to keep in a little bit of a war chest, or just know that that's going to come up as you're launching.
So $25,000 to $50,000 launch, and Black Card covers a lot of those launch fees, but then also another $25,000 to $50,000 after launch to kind of set up insurances, travel, meeting investors, admins, audit. Sounds like a lot of money, Adam. Who pays for all that? Is that just out of the fund manager's pocket, or how does that work?
Yeah, that's one of the great things with the funds is if you get your docs done right, the third-party admin costs usually come out of the fund. The blue sky filings, those come out of the fund. The investor fundraising, usually it's kind of a split, but usually those are manager costs. So even if you're starting everything up, and a lot of clients actually, they put their Black Card fees for some of the launch in through their fund. But if you put those in your docs and you disclose them well, you can get those ones reimbursed, a lot of the third-party admin and going forward, and some of those initial compliance costs. So really, once you've got those paid for and reimbursed in some of your first deals, a lot of the stuff's just asset meetings and investor meetings that you're looking to put out of pocket. So it hedges a lot of that upfront cost once you get those initial first couple closings done and first assets in the pipeline.
Well put, Adam. Great question. So hopefully that makes sense to Devin, if that was a decent answer. So variable cost there, you want to set all these things up, and you might, that's one of the reasons, and I keep talking about Black Card, but here we are talking about it. when you launch, like setting up your legal docs is just like, yes, that's important. You got to get that done. And we helped you with that in Black Card. But after that's done, there's this whole myriad of people and third-party groups that you need to work with. Tax, audit, third-party administration. If you're using a prime brokerage, insurance partners. I mean, there's 12 more, but I just named 5. And it's like, who do I go to? Prices vary from a few $1,000s to a few $100,000. So what we try to do is negotiate those discounts, make it easy for you that you can bring in a system that works well for you. So great question there. I think I've got a thumbs up from Christian. You got somebody ready? Okay, we got someone coming on live. By the way, if you have questions, drop them in the chat, and then we can bring you on live. So whoever's on live, just come to the studio. Anna Jackson? Savannah Jackson. Welcome on, Savannah. How you doing?
Hey, I'm really good. Thank you, Bridger. Thanks, team.
Yeah, good to have you here. Let's make her a panel so I can see her there. Give me 1 second, Savannah. There you go. I can see you.
Okay.
All right, yeah. What question do you have for us?
Yeah, so I'm fairly new to the fund space. I haven't built a fund or managed a fund, but I'm excited to get started. And I've been studying you guys for probably the past year. And I've basically found myself in relationship with some really cool people that I've learned a lot about, like different banking instruments and sort of private bank instruments. So the short version is my vision is to create a fund, and I've already started the process to and we're going to raise an initial like 2.5 to 5.5 million. That's going to be used to purchase an instrument, an SBLC, which is it's a cash-based instrument, but also has a performance aspect to it. And then that's going to go through a bank debenture program, which then multiplies it. And so then that's going to fund the fund. We're going to evolve into a family office at some point. And we're going to promise our initial investors like 30% return, and then an equity position in the hard assets that we purchase with those proceeds. So my question is,
cool. Yeah, okay. What's your question? Yeah, what's your question?
I was like, have you had any experience with that? Do you have any comments? I mean, the people that I'm working with, I've vetted, so they're solid. I know there's
tell me more about this SVLC instrument that you're looking to do. How does it work? Who's issuing it? How does it work?
Sure. So standby letter of credit. It's being issued. This particular one is being issued by HSBC Hong Kong, I believe. And then I might have it backwards, and then monetized through Citibank Singapore. And the family office that I'm working with, this is part of what they do. They do other really big, like very large mezzanine funding for big projects, developments, et cetera. This is just one aspect of what they do. And so they're guiding us through the process, kind of mentoring us, but and I'm going to continue to work with them, but I also am going to set up my own HSBC accounts. And
so you've got to bring equity to the table, and then how much credit do you get?
Yeah, so we're aiming for 5 million, 5.5, but 5 million purchases a $250 million instrument.
Wow, that's quite a
yeah.
I'm guessing the requirements are pretty tight on that 250 then.
Well, there's actually a couple of different options. I mean, you can do an 80% project and 20% cash, or it can be more cash, but the LTV is a little bit different on that one. But essentially, over the course of 40 weeks, so I'm planning on starting 2026, Q1 of 26. We'll probably end up with somewhere around 500 million by the end of the year. And that will get then deployed into assets. And then
this is to fund
Bridge, I have
real
a
estate
comment
assets.
if that's okay.
Oh, what's that?
Oh, I was chiming in. Bridge, I have a comment real quick, if that's all right.
Go ahead, Link.
And I didn't hear your question, Bridger, but go ahead.
Well, I heard something in your introduction there that I just want to comment on, where you said you're going to promise investors a 30% return.
I know, I'm saying that, yeah.
So lesson for everyone here, you don't promise or guarantee anyone anything ever, okay? You're targeting a return. Make sure you know the math on a gross versus net after fund fees, etc.
Thank you.
Kind of got to be careful with your
words. Yes, I'm learning. Like I said, I appreciate that correction.
Savannah, I have a question for you. Is this group that you're working with, like how long have you known them or worked them before?
I've known them for about 7, 8 months, 9 months-ish.
Okay. So fairly new then. You don't have
fairly new. Yeah, I mean, I'm fairly new too. So, but but I've worked with them in some other capacities as well.
Okay, gotcha. So yeah, with Lincoln, your comment was spot on. Yeah, no promising or anything like that. But with the types of returns that you said 30% returns or something like that. And with these SBLC through some type of bank to venture program or something like that, I just have red flags kind of going up a little bit when I hear this stuff.
That's common.
So,
I expect that.
Sure. Yeah. So
I've heard it all the time. That's part of why I did a lot of research first.
Yeah. Now I've been around the block a bit, and I've seen different people do different things, and there's a lot of scammers out there, especially when it comes to high amounts of money. And you're talking about initially putting just a few $1,000,000 in to then have $500 million later within a year, and you're talking about Hong Kong, you're talking about Singapore, and all these overseas things that seem, it seems good, but then you actually dig into the weeds, and I would say it's a very high probability that it's really not what it seems. And so I just caution you to do a little bit more due diligence in it more than anything before you really dive deep into this, because a lot of the times there's some type of fraudulent activity or something that's fishy that's going on where you can get in trouble. So just wanted to throw that out there.
Totally, I appreciate that. Like I said, I am very aware of that is the 99.9% rule with a lot of these things. The attorney that I have is actually international defense attorney as well. And so he's very familiar with it. And it's also something that I've used to vet the people. So we've done kind of our background deep homework, and we also have the process where it's all done through the bank. So we have to get verifications to the bank and, MT 760s and all that kind of stuff. So, but I appreciate that. I mean, it is also worth mentioning most times it is not a real thing.
Yep. I would, and to John's point, we just had somebody I just knew, just the same thing. They put in, I don't know, $250,000 to get 10 million out, and then the $250,000 they put it in, and then it was gone. And
I mean, I've heard that.
And the person was gone. They bankrupted the company, and it was, that's anyway. You already are aware of this. Just to echo that, I think that's great. Again, though, if it works out, pending it works, this could be pretty interesting to fund your venture. So I don't know if you had a specific question for us on top of that.
I just wondered if you had any experience with those kind of instruments or those kind of programs, just being in the space that you're in. And like, I mean, again, I feel like I'm pretty well set with the attorney, but I'm just learning how the funds work. And I want to come into fund launch to be a good fund manager and to really learn all the nuances of everything. So that's my thoughts. I just kind of was like, have you heard of anybody doing this kind of thing before? And all the attorneys that I have talked to, because I've spoken to a lot of international attorneys when I was interviewing people, attorneys for this role, because it's a very nuanced, you don't find out. People don't know about this stuff very often.
My question I would ask them is why would they do that?
Well, I can go into that, but it's that's like, a long conversation.
Like if I was a bank, if you give me $5 million, why would I give you $250 million?
It's the way banks are. I mean, it's just basically. I mean, it's the way the banks work, right? They loan on the money that you put in, right? So they're making far more amount than that they're giving back. They're only like we're paying off the instrument inside of the like every month that we get a disbursement, there's a 20% that goes back to pay off the instrument. There's 17% that goes to pay off the brokers, and then the returns come to us. So it's like these banks, they can.
But what if the deal goes bad? The leverage is all in the bank. It's just giving someone a 100x leverage is pretty crazy. And so that's the question I would have in my brain. The question you asked was, have you had experience with this? John just shared, I just shared. The answer is yes. We've seen a number of Black Card members do this.
Of bad deals.
And a lot of them have turned out bad. Or they did enough due diligence to figure out, oh, this isn't going to work. So that's why the caution flags go way up. Because you got to ask yourself, why would they ever do that?
I'll just chime in one more little tidbit here. I was talking to a group just a few months ago, very similar to this type of situation. This guy was based in Canada, had all this, and his partner was based in the Middle East, and all this different stuff that was happening. And it was it was after we dove into it just with a couple of different phone calls, it was very apparent that it was some type of fraudulent scheme.
Sure.
So it is very, very similar to what you're talking about. And Lincoln sitting with Trenton there. Trenton was on that call with me as well. And yeah, it was. Anyways, just another word of caution.
No,
like,
no, I get it. Yeah, like I said,
it's extremely high returns, like you're talking about. Just I would say 100% of the time, it's fraud. Okay.
Yeah. Okay.
There's no 99.9%. It's 100%.
Okay.
If it helps, Savannah, I've worked with both banks you're talking about and issued letters, or worked with them on issuing or receiving standby letters of credit when I was at a Fortune 50 treasury. And the reason those instruments exist is because there's a party who is not trustworthy and not creditworthy. And those instruments are effectively saying the bank is willing to give you cash because of somebody else's signature. And the only reason a bank ever does that is because they have somebody else's cash that's going to pay for it, not their own. And so the amount of risk just inherently in those instruments is extremely high. And the amount of fraud that you see on them is really concentrated in Southeast Asia, in my experience. In fact, the only time we ever had one drawn on was a Southeast Asian case, and it was a real bad situation. So even with, I mean, I'm talking about a multi-billion dollar company with infrastructure researching it. They still got us on one of them.
Wow. So. I just curious, because I mean, people are using SBLCs for international trade and commerce and oil and fuel all like every day, all day long, right?
Yeah.
So and those they're legitimate instrument. It's not that
the instrument themselves is legitimate, and the reason they exist is because there is some chain in the commercial transaction where somebody is not fully trustworthy. And so you're trying to get, and so you're getting a local bank, which usually has somebody behind it, to say, hey, this person can't be trusted, so I'll give you some money so that you'll trust them. And then if something goes wrong, you just take my money. And so it sounds to me, based on what I've heard, that whoever you're working with it's not that they're trying to risk shift. Even if it's a legitimate transaction, they're trying to take a very high risk that they are not interested in and give it to you under the expectation that you don't understand how complex that risk is, so that if something goes wrong, they don't lose money, you do.
Okay. I mean, they have proof of concept. Like I've seen the redacted,
Yeah. And in the call John and I were on a few months ago, same thing. And I've been around enough and dealt with enough fraud that, once people start talking that way, they build up proof of concept so that they can rob people later.
Gotcha.
So
I appreciate everything. I mean, we're gonna probably go with HSBC Barclays as well. I mean, that's like they just don't pay quite as well. There's different options we have. So, and I know we can go through those banks, personally. We're just doing the first round through.
Yeah, Savannah, thanks for your time. We're gonna keep moving on here.
Yeah, thank you though. Thanks, guys.
And as you can tell, though, again, we're putting up red flags. That's what people hire us to do in Black Card, though.
Yeah.
And this is what we do. We have the group on today. We also, Forrest was at Standard Chartered, a vice president there, and worked in Southeast Asia. He's the head of Black Card. He's not on today's call, but so if you need people to look at it, this is what we do, and we're happy to look at it, and we can. Again, it's ultimately your decision. We can just point things out. Think good questions to ask your attorneys and good questions to ask all the parties involved. So anyway, Savannah, great topic. Hopefully that wasn't too discouraging.
No.
But, we're trying to just be pragmatic and you take all those and take it back to your people. So thank you.
Absolutely. Thank you so much.
Yeah, thanks, Savannah. I got a thumbs up. We got somebody else queued up. Let's just roll right into the next question. Thank you, Trenton. We got coming in. Okay, Cassidy, you're queued up. So Cassidy, come on live here. We'll give us a second, then you can answer your question. We'll make her a panelist.
What's up, fellas? How you doing? Thanks for having me on here.
Hey, hello. Can you make it? Sorry, give me 1 second. I just want to make sure I can see you here.
Yeah. Can you see me?
There we are. Cassidy, hello. Tell us what's going on. What can we help you with?
Coming in from sunny Arizona. I went back
on a walk, too. Just out on a walk in sunny
Arizona.
I love it.
I know. It's beautiful here. So I went to your fund launch event in 2023. A buddy of mine invited me. I was fresh out of dental school, and took me a couple years to find an investment grade, strategy and opportunity that I could bring to a fund concept. And luckily finally got there with some incredible partners over a couple years. You guys were my inspiration to get there. So something I wanted to ask you guys was, we really want to do a fund to a REIT conversion in a few years. And I was wondering if you guys had any experience with that kind of thing, or if you guys support funds doing that kind of thing.
My first question is why would you want to convert to a REIT?
Because of the long-term benefits that we feel like it would have, as far as, turning those assets into something that could create, generational type of wealth with the types of shares and the types of structure that a trust would bring to that large of a portfolio of properties.
Well, investment funds can do that too. Any other, like, you can do that with both a fund and a REIT. Any specific on a REIT, you're becoming more of a public asset. A lot more scrutiny, a lot tighter restrictions. You have to distribute every month. You have to do a distribution of the net cash flow. If you want to do rehab on it, you cannot do that in a REIT because you can in some scenarios, but most likely you just have to do distributions. Private funds offer the same distributions, but you can actually have way more flexibility with less compliance headache as a REIT. REITs are typically for large operators that want to just buy a big building and just have cash flow spit off every month, and that's it. A private fund is going to buy a building, do value add. They're going to move. They're going to add buildings. They're going to add a clubhouse. They're going to do a lot of times value add or other things, and then sell to a REIT that's kind of more boring, much more public, and just wants to manage and run it long term. But private funds can also manage and run it long term. So that comes back to my question, Casty. With that context, any other comments from that?
Yeah, so our concept really is buying. We have a really unique investment strategy that allows us to purchase essentially single tenant, I would say less than 25,000 square feet commercial properties that are healthcare for a really high cap rate. And we're able to pretty much bring these properties into a portfolio that we're wanting to start out as a fund. And these properties don't require renovation. It's mostly just a cap rate compression strategy, that we would be employing, in some escalations on the lease, that we would be employing across these properties. So that's why, we were considering a REIT. And privately, I mean, not all REITs, from my understanding, are public. You can still have, more controlled REITs. But it's something that we wanted to do to help us generate a portfolio that we could draw benefit from for, a long time. We're not necessarily in a rush to, form a fund and then flip it in a few years at a exit and then do it again. We'd really like to form a fund, convert it to a REIT, and have that benefit us for many years to come, considering our strategy really doesn't require renovations on these buildings. There are more so that healthcare big building with just escalations in place, already fully, occupied.
Yeah, I see what you're saying there. Yeah, so, but what I'm arguing is you can get all those same benefits from a private fund.
Okay.
A REIT, just from a simple Google search, estimated startup costs for a REIT are over $1 million. So a lot different when a fund is a lot less. So to justify that startup cost, you need to have a few $100 million at minimum under management on a REIT.
Our goal would be between 100 to 150 under management before that kind of conversion.
Before the conversion, yeah. I'm just arguing the choice to convert. I personally, I still don't see the upside of converting. From what you just explained, all those reasons you just explained, you can get all those things in a private fund, and you don't have the huge startup costs and expenses and other things. Adam and Lincoln and John, anything else you'd add?
I was reading a report last week from Blackstone. 84% of companies over 250 million in revenue remain private. 84%. Okay. Like there's a reason that the private markets, from an operator and manager perspective, like less regulation, less regulatory scrutiny, less reporting, less like it's on your life as an operator and manager. Private companies are typically superior instruments for you. Okay. Maybe for the investor, yes, there's liquidity advantages and whatnot, but I just, based on recent trends, there's a big case for private vehicles. That's all.
Yeah, no, for sure. And from what I thought I understood, that REITs could be private still. Like they don't have
They
to be
can.
publicly traded.
Yeah.
So I figured if we kind of kept them private and kind of more close to chest, the whole concept, the whole hope was that the cap rate compression that happens and the cap rate at which, shares would trade, or FFO, shares would trade at a REIT level would be more valuable than even the cap rates in a fund portfolio. And so that would be the strategy. And from what I was researching and understanding was just the whole reason behind a REIT is to have more valuable cap rate, for your portfolio of properties. They trade at a higher valuation, and you can still keep them private close to chest. And for the managers, there is benefits where you could put in there, and I know that I'm new to the fund space too, so I'm sure you could do this in a fund as well. But there are you could put vested shares into the documents for a REIT as a manager. So when you hit certain benchmarks, there's a pathway for the managers to accrue an insane amount of value from their REIT in the form of shares that get vested once certain hurdles are crossed. And so the goal for me and my partners is to create some massive generational wealth
So you think you'll
building
make more
engine.
money as a manager running the REIT?
Yep.
You think, yeah, you can extract more shares or value or from running that REIT. Adam, did you have a comment? You look like you're on the tip of your tongue.
Yeah, there's a couple of things. One of them is I was actually with Bridge Investment Group for quite a while when they looked at selling off portfolios to be able to do that exact same strategy. And something I can tell you is it's very finicky in the market. You might take the same portfolio and try to do a REIT or an IPO strategy, and you might get a 15 to 20% discount on the value by having to go through that, which is not a good idea. And maybe you'll get a 5 or 10% accretive value in it, but it's very, very lumpy and cyclical on the market, whether you can do a public portfolio sale. But the real value in it is how stabilized those cash flows are and how consistent and regular they are. And there's a little bit of contradiction what I'm hearing that the black card could actually help you navigate, which is if you're getting things that are unoccupied or at discount that don't have all the tenants into it, that's not a REIT product. But by taking that basics that you're looking at, that empty shell or like a single tenant, and you're ramping it up and occupying it, the amount of value increase that you get in that, you might increase it 20 or 30 or 50% by getting it occupied. But if you keep it in a REIT format, you're just going to be distributing the cash flow, and all of that built-in gain is inaccessible. You don't get to do anything with it because you contributed the asset after you stabilized it. So the kicker is, if you've got the option to build up and improve the value and then hold on to it at 8%, you're never capitalizing on that until the very, very, very end. Almost the easier route to do is like take the asset, value add it, build it up, you sell it to a REIT or some other value add player that's going to hold it long term, and you just made 20 to 50% for your investor base, and then just go do it again and do it again and do it again. And at some point, you're going to pile up a big enough track history of investors that trust you with their money, and you're going to have enough capital from those GP carry distributions that it's going to be pretty easy after you've done a dozen of those to say, hey, maybe we should buy some that are long-term holds that have a very, very different investor profile for those guys who want coupon clip versus opportunistic. But you still have to go through the opportunistic to get to the point where people will trust you with that long-term coupon clipping. Does that make sense?
Yeah. I feel like, what would you say if we were able to get these properties fully occupied at like a very great cap rate, like 8.5, 8.65, a fully occupied property that we could then compress into a 6% cap rate once we have a certain portfolio? What do you think that would be worth, holding on to?
Take those all day long and flip them until you've got a fantastic war chest and an entire community of people that are investors that you've made massive amounts of money for. because you want those ambassador, like the initial investors that have a good story, that are good references, that you've made a lot of money for, that you can turn to. Because you can't go out and just raise $100 million REIT fund without, 10, 50, $75 million worth of people who said, yeah, I'd trust Cassidy any day with my money. Let me show you all the deals that we did together, that he did a fantastic job as an operator to value add, to flip, to find it good deals. And then it's way easier to go off and manage a $250 million deal in a REIT space that's coupon clip because you've done the heavy lift up front. But you got to prove that track history first.
I want to use a fund to build up to, 150 million, 100 million asset under management point before, considering the REIT conversion. But it's just a matter of the pitch deck formation, right? Because if I'm going and I'm trying to
Cassidy,
find
I'm
people.
sorry. I got to cut you off here,
Yeah, you're
Cassidy.
fine.
We gotta keep rolling.
No worries. Thank you
Appreciate
guys so much. Yeah,
good
you have a
question
good
on that.
one.
As you can tell, we've looked at doing REITs. I mean, we've looked at this extensively in Black Card, and for almost everyone we talk to, it just doesn't make sense. Hence why we're kind of like, and I would assume in your situation for that size of capital, that's kind of where we're at. But anyways, appreciate you. Hopefully that was helpful.
Thank you.
We can talk to our team more. We got to keep this show rolling. But
Great.
thanks, Cassidy.
I don't want to hog it. Thanks, guys. Have a good one.
See ya. All right, we're going to queue up our next. And by the way, so if you have questions, drop them in the chat or Q&A. If you want to come on live, just let Christian know if you have a camera on, and we'll bring you on live here. One other thing, if you can share my screen. So for people that maybe missed the beginning, and I guess I don't know if you can make me full screen here for everybody, but so tomorrow, we've been talking about Black Card. We have this cool promotion going on, $7K off of Black Card. We've never done a discount in Black Card ever. So this goes away tomorrow. Tomorrow is the deadline. You can see below fundlaunch.com/7K off. That is a link to book a call. All you do is book a call with our team members. They can walk you through. So some of these people I've been cutting off a little early. If you want to talk to one of our team members, please feel free to book a call, but book it today or tomorrow because everything goes away. Again, we have a goal of giving away $4 million of credit. We have 11 call spots left to hit $4 million. You can see our counter at the top of my screen. So if you want to book a call, hit that link down below. And again, in Black Card, I'll go through this very briefly, but you can see the back end here, 30 plus coaches. You're meeting 3 of them right now. We have office hours every month where we hop on, pitch deck design. This covers the legal fund formation right here. All included the mastermind. We have a full community of other managers in Black Card. We have the capital committee and fund launch partners that goes in and looks to invest into Black Card members' funds. I'm skipping through here. The tools, we have the 50 plus partnerships in Black Card. For example, Carta is a Black Card member partner with us, 20% discount to all people that use their fund administration service, just to give you an example of the type of partnerships inside of Black Card. You also get Fund Launch 360, our whole marketing suite and platform, and then Fund Launch AI coming soon. So you get the incubator, all the mastermind tools, and the mastermind and the tools inside of Black Card. You can see from here. Again, typical cost for Black Card. Again, this covers your legal costs. It's about $35,000. So that covers all the stuff I just explained. We've never done this before, but we're doing $7,000 off, and this goes away tomorrow. So this is a golden ticket. I'm telling you the truth. We have never done a discount ever in Black Card until the last, week and a half, 2 weeks we've done this. So how that would look, you just take it right off the bottom line. It says approximate because you can, if you don't want the events, you can just pull that out. Or if you don't want other pieces of Black Card, you can strip those pieces out. But a standard package is about $35,000, brings it down to 28 to give you the full incubator that includes your legal docs, pitch deck, the one-on-one coaching, daily office hours. You get to go on calls with John and Adam and Lincoln and myself and others inside of here in our office hours, and then all the tools. And then bonuses, you get, instead of at 1 year, it's a 13.5 month. You get internship placements, and we're throwing in our event in my office for 2 days. So 2 days, you're going to come. John, Adam, Lincoln should all be there. Our other coaches are flying in for 2 days. We're going to think tank and work on your funds. You're getting a taste of it today. We're going to do this for 2 full days in January for the 29th and 30th at our headquarters just for Black Card members. Furthermore, till tomorrow, instead of paying all up front, we're doing payment plans. You can start for $5,000 down and 0% interest. We will finance this. So really, the decision is, do I want to put $5,000 down on a payment plan and just see if this is worth it? See if this is the right fit for me and what I'm doing, and come check us out. Come taste it. Come try it. If it's not right, we have a 14-day money back guarantee. If it's not right the first 14 days, you're like, we can just give you your money back. So we try to make it pretty risk-free. All right, that's my commercial break. Let's go to more questions here. There's fundlaunch.com/7K off. and we'll see if we can get to $4 million by the end of the call. I believe there's 10 more call spots available. So there's the link. All right. What's his name? Douglas. All right. We'll go back full screen here. We'll leave this. This is still live and passively, but we got Douglas live. We'll bring our panelists back up here. And Douglas, feel free to come on stage. Give us a second to pull them up on my screen so I can see you here. But Douglas, you there?
Hey, what's going on, Bridger? How you doing, man? Good to see you.
I'm doing good. Good to have you here. Yeah, what can we help you with?
Likewise. So, hey, appreciate what you're doing. I was just talking to Adam in the backstage room and been following you for quite some time. So really excited to see what you guys are working on. And I had a question. I've been in the fund management space for the past few years, working for different groups, and I was a partner of one at one point. At this point, I think we've made the decision to look at more so a strategy on being the connector and being more of a service-based company. And I was talking with someone from your office a couple months back about another model you had offered at that time. But we're looking to really probably do more M&A and roll-up type structures where we can acquire a distribution channel as far as getting real estate agents, mortgage professionals, real estate investors at their main kind of avatar. And we want to be the connector to capital, essentially. So I've worked in the inside of multiple funds. I've been a fund manager
So
before.
you want to be a placement agent or
I'm
an
not so much
unofficial placement agent, a marketing person?
Yeah, but not for equity, more for like private debt, like business purpose lending, essentially. So more so a strategic connector to get, direct lending groups that provide first position for fix and flip, ground up construction, that kind of stuff, DSCR. And we have those relationships. We're trying to make this to where we can scale out more of a referral based approach and then using AI kind of in the middle to be that underwriting guideline analysis mechanism to get investors.
So yeah, what can we help you with, Douglas? Yeah, what can we help?
So
What question do you have?
So the question basically is, have you guys had clients that have either structured a fund for the purpose of M&A for service-based companies and or, rolling up other businesses into a single entity, essentially?
The answer is yes. Yeah, we have a number of clients doing. Now, it sounds like you're doing a few different things. You're rolling. So are you actually acquiring on the M&A side? Are you looking to raise money to do those M&A transactions?
Essentially, we want to have a fund that we can go and buy, 5, 10 brokerages or smaller brokerages, put them into one entity and then have that be a distribution channel for what we're offering, basically.
Yep, 100%. Yeah, so we have a number of clients doing similar things. Yep, across and all little different sectors of the economy. But yes, that is a very common strategy. It seems to be working very well for them as well. Adam, any portfolio companies doing this that we've looked at in Fund Launch Partners?
There's a couple of different ones that we've seen. So, I mean, there's a whole bunch of different angles you can approach on that. We've seen a few of them with Fund Launch Partners. And it really just depends on how deep you want to dive into what your strategy is, what you're doing long-term. There's a lot of family of funds options. Have you guys been in the fund management space for a good amount of time to say, are there any ancillary product lines you guys want to work with or just build out kind of a core strategy associated to it? But it kind of depends on, you can take it anywhere you want for sure. We've seen a lot of them in Fund Launch Partners.
Okay.
So there you go.
Yeah.
So good question.
That's
Douglas.
helpful. So yeah, that's pretty much, I just want to make sure that if we go down this path, because we had thought about potentially doing an equity-based fund where we'd actually invest with, operators and such. And that's something that we'll still consider. But I think right now the model is we want to scale the distribution on what we already offer there. So that's where I guess I could talk with someone from your office. I was talking to Adam, one of the other Adams, I guess, a little bit.
If you have the name Adam, we will give you a job at Fund Launch. We got like 10 Adams here. So if you have the name Adam on the chat, just apply. We will hire you. So sorry, we have a lot of Adams, Douglas, but yeah, spot on. Okay. We've seen a number of groups do this where they get a better multiple, right? They buy their distribution channels. They can actually, just by having scale, you get a increased multiple once you hit a certain EBITDA level. Can be a very good roll-up strategy. And then if you can add value add on top of that, and essentially buy your, like you mentioned, distribution channels, huge. We see this. We had a guy in Black doing this with car washes. Like those, subscription-based car washes, he found if he got over 25 of them, his multiple doubled over 25. Wow. We have a group we're talking to right now looking to do this with RIAs. So he wants to sell investment products, and he's like, I'll just buy more RIAs, which is kind of a crazy thing. So he's buying registered investment advisors, grouping them together in the tune of billions. He's already done this once. He's doing it again. And then all those RIAs will just recommend his investment products that are on the public exchanges to then distribute those. So it's an interesting way to grow. And it's a good note for people maybe on the call that run businesses. You can, instead of like, okay, how do I get another customer? It's like, well, what if I just buy the supply chain? It's a different way to think about business, which I love it, Douglas. Thanks for bringing this up.
And
Well,
I'd say on
yeah, I was
that,
about to say it
the
was,
more
oh, good.
pipeline you've got in different areas, the better.
Say that last part again, please.
I was saying the more pipeline you've got in different areas, the better. So if there's different verticals, whether you break them off into different funds or how you're keeping them, we've got a lot of people we've seen with fund launch partners that are transaction advisors that just want to keep the best deals they see. And it makes for a great pipeline because there's always deals coming through. And whether you want to keep them in your fund or you want to just make a couple of bucks and pass them along or do a broker deal or advisory deal, there's a lot of different options for you. So we've seen a ton of different programs on that would probably be fairly similar to what you're trying to build and work with.
Yeah, I mean, in full transparency, I have a friend of mine that built and sold a couple of businesses. He has a family office down here in Sarasota, and he was the one that kind of inspired me to what Bridget has said as far as acquisitions, as opposed to just building it organically or through paid. And we still do some of that stuff as well, but it's going to take a lot longer, obviously. So he would be willing to fund, I think, a few of the acquisitions, but I'm thinking from a perspective of scale to say, like, how do we get, $5, $10, $20 million, and then we can leverage either seller financing or whatever the structure is with the business owner to leverage buyout or whatever it looks like. But that's where getting that fund structure set up so we can go target those acquisitions that way. That's what I was trying to figure out. If you guys have seen that, dealt with that, had clients, fund structures, if it's super complex or not as complex, like that kind of thing.
Yeah,
100%. We dealt with that over and over again. It's a great strategy.
Okay.
Right up the alley. We got two coaches, Dustin Gomez and Dan Pearson, that help people like this every day. So,
excellent.
Douglas, thanks for coming on today.
Thanks, Bridget. Appreciate you, man.
Appreciate you. All right, we'll keep queuing them up. I'm going to hit a couple just chat questions, and we got our next person behind the scenes. I know people maybe on the chat are feeling left out. So we'll hit a couple of these. This is from JM. If a Dubai investor commits, would I need to organize an offshore fund, and does BC cover the cost? So Black Card cover the cost of organizing an offshore fund. So what I just shared a second ago was for what Black Card covers on our traditional package is a domestic U.S. fund or Canadian fund. So you're just building a fund in the United States that has U.S. investors investing. When you have an offshore investor, it's just an additional cost. We have law firms that can help you with this. It's an additional cost depending on how expensive this is. These are called international feeder funds. A lot of times they happen in the Cayman Islands or British Virgin Islands or Luxembourg, where an investor comes through those. The expense of setting one of those up triples, quadruples, from there. John has actually set up a few of these. John, do you want to just opine a little bit on that?
Yeah, sure. It can be very expensive. But kind of going back to your question, let me answer this first. It can be very expensive to set up offshore vehicles for these investors to come in, whether it's through Cayman, Luxembourg, what have you. Can be in the hundreds of thousands of dollars to set these up. And what really the core question is from this Dubai investor or other investor in whatever country it is do they have some type of U.S. presence or do they file U.S. taxes? And if the answer to that question is yes, then there is no need to set up some type of offshore vehicle for them. What offshore vehicles typically accomplish is that they help mitigate the tax filing obligation for those offshore persons, those foreign persons. I'm not saying they don't have to pay tax, but what it essentially does is if an investor comes through a Cayman Island feeder fund, for example, then it comes into a Delaware fund. That Delaware fund goes and operates and does whatever it does, and then pays taxes on behalf, takes the tax out, and then it sends the returns up to the Cayman, which then goes to the investor, and which is great, and that's what the investors want. No, I wouldn't say no. Very few foreign investors want to be subjugated to filing U.S. taxes on a federal level and on a state level. And it can be very cumbersome for those individuals, especially if you have like a real estate fund or some other fund that has assets in different properties or in different states. So just to give you an example, let's just say you did have a real estate fund and multifamily, and you were investing along the entire East Coast, and you're investing in 15 different states, right? And you have a good operation. That investor would have to file based on the taxes the income that you generate in all those 15 states, have to file 15 separate tax returns for all those different states and federally as well. And so they would have to hire accountants and others to help organize that and file the taxes, right? So nobody wants to do that. And so through a feeder structure, it eliminates that obligation, that burden by them to file those taxes in those states because it's done at the fund level. Now, if this due by investor already has some type of presence, which a lot of them do, because they, if they're investing in the United States and they're investing a few $1,000,000 or whatever, they probably have an LLC or some type of corporation set up somewhere in the United States. And so they're filing taxes anyways, and it's not a big deal for them, right? And so if that's the case, then there's no need to set up any type of feeder vehicle or foreign feeder vehicle, I should say. And you can just let them invest directly into the fund through their LLC or corporation that they've already established in the US.
Well answered. Hopefully that drop follow-up questions if you have them. We'll keep moving to more questions. And by the way, our other panelists, Lincoln and Adam, I told them they said they had calls in and out of this, so they're hopping off and hopping back on. So just don't be worried if they're on or off. One or two more quick ones, then I think we got someone backstage. So, oh, he needs to go now. They got to run. All right, we'll bring him on here in a second. I just had one question, was on Fund Launch's Investor Network. So we help, and you can queue them up in the back end if you want to bring them live. What access do you have to Fund Launch's Investor Network? How much do you guys help people raise capital? So with Black Card, we are not a placement agent. We are not a broker dealer. So we do not raise capital for people. We do not promise to raise capital for people. What we do help people do is build a great investment vehicle, like a fund that investors want to have. And then we help you try to put you in the best position possible to raise capital. So are we going to introduce capital and put them into your fund? No. Can we put you in a good opportunity, a good place to raise capital? Yes. So we do a thing called Capital Committee. Usually once a month, every other month, we bring on usually a dozen to 24 investors to do live calls with Black Card members. We also have a $30 million GP stakes fund looking to invest into Black Card members as well. Last year we did 3 events where we went to places with capital raising events going on nearby where investors were at, so that you guys had opportunity to be in the room. Ultimately, though, it comes up to you to close the investors into your firm, but we're going to put you in a great position that when you get the chance to talk to somebody, it's like, wow, that fund was amazing. That was awesome. That's our idea with Black Card. All right, who we got queued up, Christian? Ramon?
Afternoon, Bridger.
Ramon, how we doing?
Hi. Hey, Bridger and the Fund Launch team. How are you guys?
We're doing good. Good to have you here. What can we help you with, Ramon?
Okay, so one, I want to say thank you because I won the Fiore e-gift certificate.
Oh, let's go. Hey, that's
right,
great.
and I'm actually wearing the hat here, so you've got me styling here in the
That's
Motor
awesome.
City.
Well done. So it actually,
Right,
it actually works. There we go.
Thank you. So now, one thing that you mentioned in the last webinar that I attended was that there was a benefit to, let's say, having a sense of urgency this year and launching the fund so that you can get an audit under your belt. Now, does that assume a non-zero cash raise before the end of this year? Or is, can you kind of break down to me like how that works and what the benefits are? And I want to add to that in addition to me launching a fund, I have a number of NIL and pro athlete clients in the collectives that are having this influx of cash. And so, I imagine that you've already kind of built the model. I wouldn't necessarily be managing all of their funds, but they are essentially looking to duplicate what you've done, and I'm trying to duplicate what you're doing, or they're trying to duplicate what I'm doing, and I'm trying to duplicate and scale so that I can do what you're doing as well, if that makes sense.
Yeah, very cool. And what are you looking to invest into? What's your strategy?
Primarily real estate, but they also have their own businesses and things of that nature. So, there's different funds at different sort of sizes that are the targets. But in terms of launching the first one, I wanted to make sure that I was, taking advantage of, you guys' knowledge and wisdom. And I wanted you to break down why having that first audit is under your belt is so important, and what that needs to look like from the stage that the fund is in at that time.
Yeah, so I'll clarify from pre-start. I just believe in getting started even if it's small. Now, whether that happens this next month and a half before the end of the year or Q1, those are both fine. But so I wouldn't have this. I gotta get an audit done by the end of the year, even if it's zeros. That doesn't make sense. It's more of what I was sharing. I believe the webinar you're referencing is we have all these amazing things happening across the world and country, emerging technologies. It's a great time. I'm very bullish on the outlook over the next 4 to 8 years in the economy. And so I shared all these emerging technologies that are mixing. I think it's a good time, even, and depends on what market you're in. If you're in real estate or equities, there are dips. And I was arguing, and I still argue, that this is a good time to get involved. Now, you're in real estate. We're looking to probably get some big rate cuts next year and the next year after that. Could be a good time to start setting up a vehicle and fund to get that going. And what I argue as well, if you want to have a fund set up in the middle of next year that's running and raise capital, you should start today. Because setting up funds just takes time. It takes time to file the docs and to raise capital. Like, if you're like, man, I would love to have a fund, like, funded and going by June of next year. Like, we got to start right now and get moving and get stuff filed and start talking to investors and get your pitch deck fleshed out. So that's what I was arguing. Is that a little bit more clear, Ramon?
It is. Because I was wondering whether it was sort of some sort of benefit, because it didn't make sense to me being that simple either. Some sort of benefit. Let's say, for example, a lot of people this time of year will begin filing, entities so that they can have that born on date, if you will.
Which some people, like that. I'm all about momentum. When you join Black Card, I like pushing people. I'm like, let's get going. Let's move the needle. So I'm all about momentum. Now, getting an audit done this year, I don't think is going to help you either way, because if it's zeros, it's zeros. So that doesn't really matter. But I'm all about momentum and getting things moving, because you want to be, I love, when preparation meets opportunity, that's when magic happens. Let's start on the preparation now so that opportunity doesn't miss you.
Okay. So one last question, and then I'll let you guys go. What would the first, let's say, 7 days of Black Card look like for someone who was extremely aggressive and 100% dedicating their time to it?
Yeah, great question. So let's say you join Black Card tomorrow. You come in, we do an onboarding call with somebody. So we come in, that get you onto Slack, we get you with our coaches. We usually do your first onboarding with a coach within the first day or two of you joining Black Card. And that call, bring all the stuff you have. And what we do is we meet you where you're at. So some people are extremely prepared. Others are like, I don't really know. And both are fine. And the reason it's Black Card's very custom to the person. So if you come and you got everything figured out and thought through, we're going to start giving you homework assignments and to-do lists, and you can start moving through stuff pretty darn fast. Other people, it takes a little bit longer. We're more concerned. I'm less concerned. I just mentioned speed is important, but we want to build something amazing. So if it's going to take longer to build something amazing, that's fine. If we're ready to go now, that's good too. So we're going to push you through this, what we call the fund launch formula. We have a 4-stage process. You might be ready to jump to stage 2 or stage 3 or stage 4 right away, or we need to spend more time on stage 1. The whole goal is to build a fund that investors want. So that's how it happens. So the first 7 days, you're meeting with a coach. We do roughly 14 office hours a week. So if it was Friday you joined, we do a call Saturday. Vutran does his call Saturday. Sunday we take off. Monday, I think, John, are you live Monday? Or is it Lincoln?
Not this Monday, but the next Monday. Lincoln will be on this Monday.
Okay, Lincoln's live Monday. You're on the next Monday. So you can actually do an office hours with John and other coaches, start meeting other members. You could even see maybe there's other members. There's a lot of members doing real estate. So be curious if people in your local area. Your first 7 days are going to be pretty packed. You're going to be on Slack messaging people. You'll probably meet with a second coach in your first week. But again, it's go at your own pace. It depends on how much you want to put into it. Does that give you a better picture, Ramon?
It absolutely does. Thank you.
Good questions, y'all. Thank you very much. Thanks, Ramon. We got someone else queued up. Let's just roll into the next question here. Who we got? Maria and Chad. Maria and Chad, welcome on. And by the way, if you have questions, put them in the chat, and Christian can queue you up to come on live. Maria and Chad, welcome in here. Good to have you guys here.
Hi, thanks for having us. This is really great. Thanks
Good
for
to see you,
doing
Bridget.
this. We still had some lingering questions, so it's really helpful. So
Yeah.
the good news is during COVID, we started a tiny home manufacturing company, and last month or 2 months ago, we made the Inc. 5000 list as one of the fastest growing manufacturers.
Let's go. That's awesome. We did too.
Yeah.
We also, what are you guys ahead of us? Where are you at on the list? What number?
1467.
Oh, you guys are ahead of us. Well done. We're number 2652. So
All right.
We'll celebrate.
Well
with you.
done. That's awesome. Congrats.
So right now, so what's next is we really wanted to create the community. So we're creating this Solari Village. I have 3 quick questions, but let me just tell you real quick. So we're starting Solari Villages. We're buying up old RV parks. So we have real estate. You're converting them to tiny home communities. We're building solar grids. We have data centers and a lot of other sustainable technologies. So it's a multifaceted, fund, and it's got a lot of cool verticals and things like that. So so we're excited and can't wait to share it with everyone. So the three questions are, this is a simple one. We've already started using a convertible note. So and we just wanted to kick it off with some seed capital. So when we do our PPM through you, I'm assuming, because we've done this before, it won't be an issue to convert those people into the new structure, the new PPM. Is that correct?
John, do you want to talk on that?
That's question
So
one.
yeah, sure. Yeah, it depends on, it depends on what the note says, right? Exactly. So a note can be converted into equity into the fund structure, but it's not typically not directly into the fund LP equity. So it's more of upper level. So depending, I don't know what you guys are convert the terms of the convertible note, but usually it converts into an upper level entity, kind of like the sponsor GP manager parent type of company entity, and not into the investment fund itself.
Oh,
Because
interesting.
is that what you guys were you planning to convert it into more of like the
We
LP
usually
side
just
of
move
things?
it into the PPM, but we're assuming that we would do a PPM as a securities instrument for the fund. So we should
So
keep
yeah,
it.
so notes are not securities, right? So there's a differentiator there, and so even that can get complex, and so you don't want to violate securities laws, and so
No, we do.
yeah. So
keep it.
I mean, they're fine for seed capital and other things like that, but if you're actually trying to convert it into like an LP interest, right? They'll have to be it won't convert like you think it will. It's more of the subscriber needs to come in and subscribe to the offering materials, all the documents and things like that, and become a limited partner to the fund instead of just having a note convert, because there's KYC, there's AML, there's the credit investor checks, like things like that you just can't do that with a note.
And we won't. It's not automatic. We won't make it automatic. So that'll be a caveat. So I think you actually answered the question.
So basically, we could start with that, but we could have them basically release that and go into as an LP separate.
Sure. Yeah. You'd pay the note back and then have them take that money and then subscribe into the fund. Yeah.
Okay. The second question is we weren't sure. So we have all these verticals and they're actually they could be separate entities. And so I'm just curious if somebody comes in, so we have technology, we have the real estate, we have the housing product. So if somebody comes into a fund and you have all these buckets, do they have an option to direct more of their money into one bucket more than another? Does that work for this? Or is that too complicated?
That doesn't typically happen within a single fund because there's various reasons for it. But basically, if you wanted to do that and you had enough capital raised for these different buckets that you're talking about, you could set up separate funds for these different types of asset classes. One for the tech, one for real estate, one for the manufactured housing, whatever it is, right? And so those investors could come in at those separate funds and allocate 100,000 here, 100,000 there, 100,000 there, right? Or sometimes you can set up a parent fund that is above those three different verticals, and they can invest in that parent fund, which then can diversify into these different asset classes. It's a little bit more complicated to do that, but it's definitely possible.
So that would be part of, I mean, that's the strategic planning help that we would need. And I'm assuming that's something that
would be like a fund of funds kind of thing.
Yeah, in a way, it would be. And then you'd have different.
Yeah, it's just allocated there. I guess maybe the question to you guys though, of the tech, real estate, and housing, they're all working together for one goal.
Yes.
Correct.
Yes.
Right. They're all on these modular homes. As far as cost goes, like how much cost will go into the tech, how much cost will go into real estate, and how much cost will go into housing? Like if you had $100 million, what percentage would go to each?
Oh, probably the majority to the real estate, and maybe like 20%. It depends on how much upgrading needs to be done on the parks themselves, but maybe 15-20% on the tech.
What is the data center cost?
Like 5 million. About 5 million.
Yes, the data center is only 5 million.
Yeah, but it depends on each park is a little bit different. So it might range, right? It might be a range.
I think I'd like to do more strategic planning around this. And I just wanted to make sure we get that support, like if we were to come to in January for that. We have a lot of questions around that. We could do it either way. I just, some people ask, they were asking about it. Plus, we're award-winning producers. So we have a whole media class in there, TV show and other things related to that. So I think that's a more complicated question for.
The answer is you can put them together. The question is, do you want to put them together?
I guess that is the question.
That's the question. You can't we could put them together. Do you want to do that? Will investors like that? And that's something we can unpack in Black Card and really stress test. That's what we do all the time.
Yes.
John, anything else you'd add to this?
No, I think you nailed it on the head, Bridger. It's not the question of can you do it. It's which strategy is the right one. Because there are certain industries where you can't really combine them, like stock trading and real estate. Like they don't really go together very well. But with what you're talking about, the data centers, real estate, the tiny homes, packaging that you can describe that this is the investment thesis. This is what we want to put your money into, and these are our targeted allocation amounts. And you say targeted because you don't want to limit yourself to anything, but you say targeted allocated amount to whatever 50% in the real estate and 5% in the data centers or whatever it is, right? So, but yeah, but if you don't want to, that'll be a kind of a lot of strategic planning Q&A type of thing with the different coaches here at Fund Launch and really trying to vet the strategy out. And not just that with here, but then having you go out and talking to your investors and seeing what they are comfortable with and what they want to invest in. Because that's the real test. That's the litmus test, right? Is what they want to do and what they're going to invest in.
Yeah, thank you. So the third question is we do have some soft pre-approvals for financing directly related to, it's really the real estate, right?
Well, it's for a specific project. Yeah, for like a park or two parks or something like that.
So is it appropriate to do carve-outs if you're building a fund for a particular entity, or we'll be doing multiple entities within the fund, but we have someone that wants to do a carve-out. I mean, we can keep that separate, or how does that work?
Like they want to come in and partner with us on a couple of parks, for example.
Sure. Yeah,
We could have that SPV underneath the fund, or I don't know.
Correct. Yeah. So what you can do is you have your fund, and there's some org charts that you wouldn't believe. There's entities everywhere, right? And so, but basically how this could potentially work is you have your fund structure and maybe a holding company underneath it. And that holding company would then hold different SPVs underneath that. And you'd have different partnerships from different groups into that whatever SPV that is, right? And so maybe the fund owns 80% and the partner owns 20% of this one SPV, and then you do it again at a different park and you own 70%, this group owns 30%, yada, 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 down the line, right? And they're just different structures, but you just have to make sure those terms are in alignment with what your fund documents say. Like if your fund, for example, if your fund documents say that you need to have managerial control or some type of voting rights or whatever it is, and it doesn't have it, and you don't have that in the SPV, then you're violating your fund documents, right? So you'd have to make sure that those SPV agreements match or align with what you promised your investors. And you just work through that as deal by deal as you go about it and putting it together.
Yeah, because that was the other part is we're trying to make sure, from a funds standpoint, what the market really wants to see in terms of targeted ROIs and IRRs, so that we can fit that in our model. And so that's something you guys deal with too, right?
Yeah. Something I'll add as well, and this is great. Congrats on your guys' success so far too. This is fun to talk to you. The Lincoln mentioned this earlier of this is more of a strategy perspective, something we would do in Black Card with you about momentum and gaining momentum. Obviously, you guys have momentum going. You could start with a small project, just a one project. Yeah. It's a single asset fund. We do that one, and then with Black Card, we spin up another one that's maybe 2 or 3 sites together, and then 5, and then we can do a bigger fund. It can build momentum for you. I'm sure it sounds like you're already thinking that way. But yes, I think that sounds like a very interesting project. Would be way fun to work on, and hopefully that was helpful answering those questions.
No, we really appreciate it. Thanks for the clarity. Now we just have to engage. So we're working on it.
Okay.
Thanks so much.
We'll talk to you soon. I like your backdrop there as well. Looks awesome. I love it.
Thanks.
Thank you.
Thanks, guys. Thanks again.
Thank y'all. See ya.
Bye.
Okay, we'll keep queuing up questions here. I'm gonna hit just a couple chat questions, then we'll bring our next person on. Can Black Card program be used for AI technology venture studio? And can you elaborate on how or would another financial vehicle be better? Max, the answer is yes. Yeah, we've had a number of venture studios in Black Card, or just straight venture capital firms. I guess you could maybe give us more detail, but the answer is yes. If you're looking to invest into AI technology or build a venture studio, we actually just underwrote a venture studio a few weeks ago with Fund Launch Partners to invest into. They had built this awesome venture studio. They had all these great startups. I think they were near a university. Yes, we look, and those are really fun to work with. Can Black Card be for family members? My son has a medical condition where I do not think he is ready to launch a fund, but would... Oh, it just jumped away from me. Where'd it go? Oh, there we go.
I can read it for you.
But like to have him a vision of community to learn from, so when he's ready. Yeah, so great question. Family members, the answer is yes. So when you join Black Card, talk to your person. You can actually have official members. Like if you have a partner or two, they can actually be on your Black Card account. You just talk to them. Sometimes there's an additional cost if there's other things you want them to do. But in the simple answer is they're welcome to join in on any of your calls. So if you're on a one-on-one call with a coach, they're welcome to sit right next to you and be there. We're not gonna kick them out or anything. I actually encourage this. Me and John, this is my brother on the call. We learned from a dad who, and you guys know our story a little bit. Our dad co-founded a deca-billion-dollar family of real estate funds, is now retired, and taught us sons about funds. None of us we didn't go to fancy Ivy League schools. We didn't work on Wall Street, me or John. John went and got a law degree from ASU, and I went to BYU, and we were in Salt Lake City, Utah, for crying out loud. We were kind of untraditional managers. We were not in a major metropolitan area because we had a dad who taught us these things. So I'm a big proponent of, we usually once a year actually do an event where we say, invite your families, bring your kids. We just did one 2 months ago. We did a cruise, and we said, everyone bring your family and kids, and then they can be part of the sessions. We usually once a year, last year we did a cruise as well. The year before that, I think we went to Hawaii with everybody. So we usually like to do that once a year. To bring family in. When will there be more Funds That Won episodes? We're working on it. Lincoln kind of tailored off. We're going to get back on that and get that going on the podcast. So coming soon, Brandon. All right, we got someone queued up, Christian. Okay, awesome. Valerie, come on live. And again, if you want to book a call and talk more, again, tomorrow is the deadline. So fundlaunch.com/7K off below my screen. That's a place to go book a call, and then come back, and we'll keep talking. Valerie, hello. I see you there. How you doing?
Hey, Bridger. Hey, John. I'm doing pretty well. How are you?
Hi.
Good to have you on. What can we help you with?
Yeah, so I'm here in Utah. Actually was at the Talk About Real Estate where John presented about funds back in the summer. So
Oh, cool.
Thanks for that intro to funds, John. I appreciate it.
You're welcome.
But my husband and I are launching a real estate investment fund, and we're going to focus on horizontal construction. And just trying to figure out what's the best way to structure the fund. We're maybe possibly thinking about an evergreen fund, or would it be better to just, as we want to do multiple projects, have multiple closes? And then how can we best make it tax advantageous for our investors? Because we don't want them being taxed like ordinary income. So just trying to figure out how to
what size, give me a scope of the give us some of your first deals. What are you looking to do? How large, how many, how long will it take? Give me some.
Yeah, I mean, looking at probably land deals that are upward towards 1.5 to 3 million. So obviously purchasing the land outright and then finding, bank financing for the horizontal construction part. We've started a construction company that will do that component. And then the goal is to just sell off the improved lots to builders.
Okay, so you're not building anything. You're just going to improve, you're going to get entitlements done?
Correct.
Gotcha. So you're not constructing anything, just entitlements and then just selling those off.
Yeah, just the horizontal, the entitlements, the the roads, the curb and gutter and all that.
Yeah. Okay. Very, very cool. We've had a number of groups in Black Card do this exact same thing. And I think last I talked to them, they are doing extremely well because
That's good to
it's a
hear.
well-needed space. If you can understand cities and local county rules and city councils to make sure things are approved, to get things entitled quickly, it can become a very good fund.
Yeah, my husband has experience in, he studied urban planning. He's worked for a home builder here in Utah, so he has the experience on that end. And then I'm just the corporate finance person, so.
Nice.
The smart one.
I don't know about that.
That was great. So yeah, the question you asked was around like structuring. I believe the fund structure would be awesome for you doing this. You don't need crazy amounts of capital, and you can get pretty good returns in a relatively short period of time. I guess, how long is a turnaround? Like a year, 8 months? How long does it typically take to entitle?
Yeah, I mean, I guess it depends on the municipality and what all is involved, but I think we're just going to start out finding papered lots, so ones that don't really need a lot of the entitlement work that's already been done. And so we just have to do the horizontal construction component, because it could take a year to 2 years to get entitlements done, and we don't want to have that risk at the very beginning as we start this fund.
Yeah.
So finding those lots that are already papered, and we can just kind of jump into the construction component.
Yeah.
Yeah, you
very
asked,
cool.
Valerie,
Go
you
ahead,
asked
John.
about like types, at least the different types of funds.
Yeah.
And how to structure. So you mentioned evergreen, for example.
Mhm.
Typically for a real estate type of any real estate fund, they're usually close-ended.
Right.
Yeah, when you do an evergreen fund or an open-ended fund, you can, but it's just a little bit more burdensome on the manager to do that, and because it's real estate, and like it's not like a hedge fund or some portfolio trading fund or anything like that, where you know the price of the unit every single day or every
Right.
single minute or second, right? You know what the price is, and you can get investors in at that price, the strike price, or you can redeem them at a certain price at any given moment, which is usually summed up at the end of the day. For real estate, as you know, you might have to go get an appraiser to come out and do an appraisal, and that takes money, takes time, markets change, and you actually don't really know what the price is, right? At that point.
Especially with land, land is
Yeah.
a lot harder if there's not a building on it to really
Exactly.
recognize
It's hard.
what
It's very hard to evaluate, right? And so
Mhm.
when you're getting people in on a continuing basis, and then redeeming investors who want to get out on a rolling basis as well, it's just really hard to do, right?
Yeah.
And there's mechanisms to do it, but I would suggest starting out, I'd probably do a close-end fund for what you're thinking of doing, and it would be a very simple structure where you have your fund, you'd have your general partner that manages the fund, and then you'd have a fund manager who takes a management fee and advises the fund on what types of land should be acquired.
Yeah.
Basically, that's basically it. And maybe have some SPVs like we talked about with those the other group that was just on here, and pretty simplify it and just get things going like Bridger's been talking about. Like just get some momentum, or maybe even start with this SPV, get some SPVs under your belt, get some track history and record going, and then you start a fund structure, and then do different ones, or you wrap those in or pull those in. And timing can be it can change on different things as well, depending on how much money you raise. That's why Bridger's asking, and then how long it takes, because that's why Bridger's asking, like, how long are these projects going to last? The 2 years. So a typical structure for a real estate fund is a close-end 10-year fund, 2% management fee, 80% or 20% carry to you, and that's kind of it. But there's lots of different strategies and things that you can do with that. But that I would say that's basically what I would start out with, and then refine and fine tune from there. Talking with the coaches and other members at Blackcard.
Got it. So with like the multiple projects, I mean, would those be their own entities underneath the fund?
Yeah. So like I was saying earlier, you would have, and one of the reasons you do this, so you'd have your fund structure here. You have your general partner above your fund,
right,
who manages or makes the investment decisions on behalf of the fund, and then you have your fund manager who advises the fund on what to do, what land to acquire, and they get an advisement fee, that 2% fee to the manager. But underneath the fund, you would have different entities set up for every single property that you acquire. And Bridger's pulling up right now. And the reason for doing that is because you want to limit your liability across all the different assets that you acquire. So if there's, and the reason you do this is, let's just say you have the first one, SPVA or LLCA, right, on the left there that he just drew. Something goes wrong with that. There's some type of entitlement issue. Somebody gets hurt. There's a lawsuit, right, on that piece of land, right? And they sue you, they sue the fund, and you get tied up in court, right? If it's not in its siloed, separated entity, that means your other properties are subject to that lawsuit because they're assets of the LLC or the fund that you put them under. But if they're separated out, then your LLC-A's property, if there's a lawsuit, something goes wrong there, it's not going to affect LLC property B because B's separate. It's legally separate. It's a limited liability company or an SP or whatever it is. So there's no contamination, if you will. But if you put let's just go back. If you put A, B, and C properties just into the fund and they're all owned, all those assets are owned just by the fund, and let's say then anything that happens across any of those properties can affect all the other different ones. So like I was saying earlier, you wouldn't believe the different org charts that are out there for these very sophisticated, very large funds. You will see, I'm not kidding you, hundreds of LLCs or SPVs formed under the fund vehicle to separate the liability and protection of every single asset that is acquired.
Yeah. There you go. There's a picture.
Our dad, just side note, Bridger, I got to say this. Our dad, he was the signer on 1,300 bank accounts for their company. Can you imagine? Like, I always have a few, right? 1,300. How do you manage that? Like, that's the size and scope of all these different entities that are set up and the structuring of it. So anyways, just to give you a flavor of that. There's a reason for it. And that's one of them.
Yeah, Valerie, we can help you all with that in Black Card. Thanks for the question so much. We're gonna keep rolling here, but Valerie, thank you so much. And it sounds like you're in Utah, so that's great.
I am, yeah. Thank you. Both appreciate it.
Thanks, Valerie. Someone asked in the chat, what's the main difference between a hedge fund and a prop firm? Good question. A hedge fund is usually one or two main people making all the trades and decisions. A prop firm, you can go look these up, but people can apply. Like, I can go to apply to work at a prop firm. A lot of times, like, I'll put up 50 grand and the prop firm puts up 50 or 100 grand. And then I trade a portfolio of 150 grand. And we share the returns with the prop firm. And prop firms will go bring on 200 traders, and they'll find the best traders of the 200 and give them more money. They'll give them $1 million, and then $5 million, and then $20 million to keep trading. Prop firms usually are more that way. They're propping up someone. A hedge fund is really centralized. It's usually one or two, the best people at prop firms spin out and go launch their own hedge funds because they're the best prop firm traders. That's kind of how that feels. So kind of different models. Now, could you run a fund that has a prop firm strategy? Yes, we actually had a few people in Black Card do this. Now there's more licenses that go into that and other things, but the initial funding for their fund had the premise of we're going to build a prop firm underneath it. So can you mix the two? Yes, you can as well. But the terminology are separated, like I just described. Let's see. Let me read some of these. Thanks for staying on. You guys are still here. This is awesome. We're an hour and a half in. John, by the way, I know you are busy. You're welcome to go or stay. I'd love to have you here, but I know you're busy. You got stuff to do, so up to you. And then we'll see if Lincoln and Adam come back in.
A little bit longer. Yep.
Okay. And by the way, we have 7 call spots left. We're at 3957. So we have 7 call spots left. Funlaunch.com/7K off. Our goal is to hit the 4 million. So if you want to book a call, we'll keep counting them live on the top of here. All right. Mentorship program. We already talked about Black Card. We talked about, is a trading strategy a main product of a hedge fund? Yeah. So definition wise, all these funds run very similarly. A hedge fund is typically trading public securities like a stock or bonds or options or Forex or crypto. That is a hedge fund. A private equity fund is a fund. They don't trade public securities. They trade private securities. So they trade privately held companies, generally speaking. A real estate fund is structured pretty similarly, but they buy and sell real estate. A private credit fund is a fund. They don't do any of those other things. They issue credit. They issue loans to people. So anyways, go from there. Did you have somebody, Christian? Okay, still working on. If you have a question, queued up in the chat. Let's make sure we answer these. Someone asked how much capital to contribute to the fund as the GPs. So generally speaking, it's about 2% of capital committed is what's written in docs. Now, a lot of emerging managers are like, man, I don't have 2% of $100 million. That'd be $2 million. Some LPAs and PPMs give a little bit of leeway for the general partners, and you can put capital in up to that percentage. But I guess the answer to that basically is you should have a significant amount of your net worth in your fund. So my first fund in college, I put about $30,000 into my fund. That was a significant amount of my net worth that was in it. And so when investors would ask me, I'd say, yeah, I got my own money in. I have a significant amount of my net worth in this thing. And if they ask me, I'd say, yeah, it's 30 grand. And that's, I got skin in the game. That was a lot to me when I was 22 years old. Right now, me and Dan have about $1 million each in our fund, roughly, about $1 million each. So we say, yes, it's a significant part of our net worth is in this strategy, in this portfolio. Our money is right alongside your money. So yes, you want to be investing alongside your investors. Do you think there will be a crash on AI data centers? Maybe, but we saw NVIDIA crush earnings last night. The crash? Maybe they overbuild. Michael Burry thinks these depreciation schedules won't be as long. NVIDIA, Jensen Huang, this week seemed to dispel that, saying these H100s have been running, their earlier models 8 years now, 10 years now. They believe their Blackwell chips are going to run to similar schedules. Most are depreciation schedules of 4 or 6 years, somewhere in that range. The other thing, though, is people are like, this, it's going to crash. You are betting against the large. It's not like these are startups. These are the Mag 7. They're called the Mag 7 for a reason. They're the Magnificent 7. They have larger market caps than most countries' GDP. So you're going against Google, who has 200 billion of cash on their balance sheet, right? And a $3 trillion market cap. That's who you're betting against. So again, we'll see. There's arguments on both sides, but I'm in the camp of, man, maybe they are investing a lot of money. We've invested about $1 trillion into AI, I believe so far, give or take. Maybe that's too much. We need to see $1 trillion of gains back from those investments, right, over the next number of years. So is it oversold? Is it not? Maybe. But also, this is the last invention humanity needs to create. So what's the cost of inventing the last invention humanity ever creates? $1 trillion? Sam Altman said, I think he estimated 12 trillion for their full plan, which is crazy. But again, it's the last invention ever. And if you don't do it, if the US doesn't do it, China will do it. And we'll all be speaking Mandarin Chinese in a couple years. So, and thankfully, me and John both speak Mandarin Chinese. We both served church missions and spoke Mandarin, so we speak a little Zhongwen. So anyways, have a little bit of fun. John, any comments on those two?
No, I think you nailed it.
Okay. You're trying to learn Mandarin. Yeah, we're all learning Mandarin anyways. But anyways, these are gonna, I believe, they would be backstopped by the government. This is important to national security that this works. Now, we have a very competitive landscape of AI companies. I think David Sachs shared this on the All In podcast 2 weeks ago. He's like, we have a very competitive landscape. If one of these leading edge models breaks or goes under, we have 4 to 5 others right now. So, which is nice. It's one of the most competitive fields in tech we've seen in a really long time, is these, true LLMs all fighting at the same time. It's actually pretty cool right now, this AI race that we're in. And it's not just startups. These are the largest companies on earth. So kind of crazy. All right. To understand that VC could be used for a technology venture studio, naturally, can you elaborate on the structure? Because VCs is a bit more complicated than just a straight VC firm investing in a particular startup. And are there extra costs to create a venture studio in the VC program? My understanding is there is not extra cost to doing a VC studio beyond, there. Max, feel free to come on live if you have more specific questions. I know you asked one earlier about a VC studio. Some VC studios that want to have office space and a place where these people can come. One of the portfolios companies that came out of Black Card and now we invested into them is All In Ventures. So we actually wrote a check into All In Ventures through Fund Launch Partners. They have a place in Provo, Utah called iHub. I think currently there's 200 startups there. iHub acts, I believe iHub they take 1% equity when you come there, but you get free internet, you get tax and legal and all the law firms there and people that are there. You get all the other great things of having this iHub studio. And then All In Ventures sits on top of that and invests into their favorite startups that come out of iHub. And you can look iHub up online. It's very interesting. Corbin Church just launched this, I guess, 2 years ago. They've done extremely well, at least so far. We'll see. Arizona State has one of the largest iHub facilities in the country. I believe they have over 1 million square feet of space. These are more incubators that they have, very similar to a venture studio style. So now maybe you separate the venture capital fund from the studio, or you connect them. That's a decision you can make or not make. The one I just mentioned, All In Ventures, is separated from iHub, but they have like a first right of refusal on any company that comes out of here. They get first dibs on these companies to invest into them. So that's one way you could set it up, separated or together. Okay. I'm with a biotech startup. This is from Sean. We have patents and are ready to get started, just need funding. Will change the world if I start a fund? Will there be conflict of interest if the fund is specific to the startup, since I will be involved with the startup? The answer is yes, because I'm guessing the fund will invest into your startup and help the assets. John, do you want to talk about conflict of interest? This is a common question we get. Like, I have investment properties that I want to put into the fund, or I have a company that wants to get funded. They're on both sides of the table. Do you want to hit that question, John?
Yeah. So I'd say generally there are conflicts of interest with just funds in general. And the reason being, kind of like I was saying earlier, is that you'd see these massive organizational charts with these different protections, but also you'll see on these different corporate structures is you'll see how these companies have different entities or different operating companies or different streams of revenue that actually feeds up or into their parent company or affiliated entity that eventually goes to the beneficial owners, which is the owners of all these different companies. For example, you have a real estate company, and the real estate company is kind of like, what Valerie was saying earlier, where she has a construction company, and then you might have a property management company, and then you have a horizontal construction, and then you have maybe a vertical construction, and maybe you have a debt services or something, right? And those can all be separate companies, and they're all kind of managed by the same parent entity or the same beneficial owners. And so it's really nice when you have your own investment fund and you have all these different companies with different revenue streams coming into you, right? And they build off of each other because you have your fund, for example, that goes and invests into some type of an asset, and that asset then has to pay for things such as insurance, could be property management, could be other things as well, and that gets paid to somebody. Well, you might as well set up a company and have that be paid to you if you can operate it efficiently, right? And then have that revenue come up to you. And so with all these different conflicts of interest or potential conflicts of interest, they're fine to have. You can have them. What you need to do though is that what's the main rule in real estate, right? It's location, location, location. You know, you've heard that probably a million times. The main rule, one of the main rules in private funds is disclose, disclose, disclose. So as long as you're disclosing that you have these affiliate entities, you have this biotech company, you have this, you know, this other this AI firm, whatever it is that you're owning, and they all help each other out and they pay fees to each other, but you're the beneficial owner of all these different things, it's fine. But just make sure and disclose it in your offering materials that you will be paying or receiving fees from these different companies that are affiliated with each other. And as long as your limited partners sign off on it, they're agreeing to it. They're saying, okay, great. I understand what you're doing. I understand how things are put together, and I'm fine with it. Thank you. Take my money and go invest it for me. Right? So you just got to remember, you just got to disclose that stuff within your offering materials.
I'll add one thing. Do it at or below fair market value as well.
Yes. Yes.
So make sure if you're going to pay your own property manager construction, make sure it's at a fair market or even below fair market value, because as a general partner, you have a fiduciary duty to do what's in the best interest of the limited partnership, the fund. That's who your fiduciary duty is. And you would say in a court of law, well, yeah, we used this construction company because it was actually a little bit below fair market value. It actually was great because the fund got a discount. That's who your true fiduciary is. And that's how, and so you disclose, like John said, and then I just added that, do it at or below fair market value.
Exactly. And sometimes it's challenging to prove what is fair market value, right? And so there's that test that you got to do. But yes, as long as it's at or below market value, as you're being a fiduciary for your investors in the fund or the limited partnership, like, yeah, go ahead. Let's set up these different companies and make some money off of it, because somebody's going to. It might as well be you.
Yep. Well put, John. All right, drop questions if you have them in the chat. While you guys are dropping them, share my computer if you can. So final call here. We have 5 call spots left. Again, tomorrow this ends. So this is our Black Card product. We help people launch funds at Fund Launch. This is our full incubator product to help people do this. The Black Friday discount goes away tomorrow. So tomorrow at midnight, it is done. It is taken away. Again, we had a goal of giving away $1 million. We blew past that in about the first 30 seconds of opening this. If you were on the live webinar 2 weeks ago. So we upped that to $4 million. We are within 5 call spots of hitting 4 million. You can see the counter top. That is a true number, by the way. It's not manufactured or made up. That is actually a true number. You can see on my screen over here. From there, again, as a summary, Black Card, you get the 4-phase curriculum. When you join and you start right away, you'd start tomorrow. You get access to the back end process. We do an onboarding call with you. You can see, you can start talking to coaches. You met some of the coaches today. If you came on late, by the way, this replay will be on my YouTube channel. It's live streaming there, and it's there right now. If you wanted to go and watch the beginning, you saw Adam and Lincoln and Trenton and John on there. You have 30 plus coaches in Black Card, office hours, pitch deck design. The legal fund formation is included for a domestic U.S. fund. Slack community access, capital committee, fund launch partners that all are designed to help make capital raising easier. There's no guarantee of capital raising at all, but help make it easier and give you more opportunities to find good capital. We do the annual events pass in here, the mastermind, which includes, so we have the 4-phase program, one-on-one coaching, daily office hours, personal account manager, custom pitch deck design, full fund legal build out. The mastermind is the Black Card workshop events, the Slack channel, capital raising events and community, and then the tools. So we have the partnerships in Black Card. When you go launch a fund, there's a lot of people you need to run your fund. Things like capital raising help, tax and audit people, marketing and PR, investor database, insurance, licenses, admin, event services. We have 50 plus partnerships in Black Card. I mentioned this earlier, but Carta and Black Card, we've done a deal. For example, one of those 50 partnerships gives you 20% off Carta's platform. Carta can be pretty expensive. I don't know, let's call it around 30 grand a year, roughly. This is a 20% discount is pretty significant. That's multiple thousands of dollars off Carta's program per year. We also have tools like Fund Launch 360. This is your full marketing engine behind your fund. I use this almost every day for my 2 funds that I run. Invest is my investor pipeline, texting, emailing out of all Fund Launch 360 manages my CRM and pipeline here. That's included in your Black Card membership. So again, Russell said this, the price of Black Card is worth every penny. I started setting up my fund prior to finding Bridger's company. Prior to Bridger, I had spent $15K on setting up my fund. I would have saved the $15K if I found him sooner. If you're serious about a fund, there is no better alternative in terms of cost saving and value than Black Card. Black Card, on a approximate cost for Black Card is $35,000. You can just take $7,000 off the bottom. That puts you at $28,000 all in cost for a Black Card. But what we're doing, what's even cooler about this discount, is we're not going to force you to pay that up front. So you actually can join, and I'm going to jump down here. You can start as low as $5,000 down. So by tomorrow at midnight, $5,000 gets you in the door, and we will actually finance the remainder of your payments at 0% interest. You can spread this out over a few months if that's easier for you to get in the door. And then right here, we're going to give you a month and a half for free. We have internship placement, and we're throwing an event the 29th and 30th at our offices just down the hall. We have a full court basketball court. You can see it here. We'll throw a 2-day event there. Our coaches are coming in. 2 days think tanking your fun, and we also might do a little skiing. If you're a skier, Utah's got some great snow, so we'll do a little skiing in January. It should be pretty fun, and you're welcome to come. Or not ski, you can just have hot chocolate in the lounge. That also works as well. So again, $5,000 down, 0% interest. There it is, funlaunch.com/7K off. All right, we'll take a few final questions here. I think we've hit most. I felt like the questions were drying up a little bit. People are like, yep, you already answered that one. You already answered this one. So we'll see. We'll pull this up. You can put me back full screen if you want. But I'm going to go back. You can even see the questions on my screen. We'll pull up a few more. I think we've hit most of these already. We've hit them. Okay. I don't see any more. Maybe, we got one that popped in. And by the way, if you have more questions, you can just book a call and talk to our team. We can help answer those and get you in there. 3 call spots left, it says. We are almost there. We're almost at 4 million. So 3 call spots left will put us at 4 million. Is that correct math? Dang, that's awesome. That's pretty cool. So 3 call spots left. If you guys book a call, a little counter will go up. Kind of fun. I have a small power generator business in Mexico. We rent and sell diesel industrial power generators. I'd like to replicate it all over the country. Each business unit franchise about 1 million USD. How easy would it be to fund a company like this with the help of your community? To fund it, we can help you put together the process, the materials, the legal docs, all that kind of stuff around this. As far as funding it, again, we're not placement agents, we're not broker dealers, so I can't guarantee capital raising for you. What we can do though is put you in a great position to do this. Pending it's a good offer, I think if people like it, they like it. We've had a lot of money raised in or around our community. Like I mentioned earlier, Fund Launch Partners, we have our own fund, a $32 million fund. We've done 10 deals so far. We have 3 more under LOI. Of those 10 deals, 7 of them were Black Card members. And the average check and commitment is $1.5 million we're putting into these deals. We have one right now we're considering putting in $2.5 million. So that's just from us internally. We also have capital committee and then other members of Black Card that are always sharing and looking at deals. So there is a lot going on. Again, no guarantee at all. What we help you do though is, and maybe I'll even share this on my screen. What we do in Black Card is this. And I'm going to jump around Briggs. I'm going to go to my iPad here. What we do is this, and this is my analogy I like to use. Any one of you right now could just go, build legal docs. Any of you could go have a lawyer build you some legal docs to have a fund. You don't need Black Card to do that. Now we do that, but you don't need us to do that. It's kind of like if you were a chef and you bought a platter, went to a nice store and you bought a platter. Okay. And this is what you're going to serve and present your food on. The difference is with Black Card is what's on the plate. Is it a stinky fish that you're going to present? Because you have a nice platter, but what's inside the platter, what's inside your legal docs matters. How you're presenting, marketing, what's your go-to-market strategy? How are you going to incentivize your investors? What's your edge? We talk about here, what's your edge? What's your asymmetrical risk? What's your team behind it? How, what momentum do you have in your firm? How are you going to get in the room, connect, and close the room with your fund? That's what we help you do. We want it to be a Gordon Ramsay beautiful meal. So yes, the platter needs to be done correctly, but what's inside the platter means a lot. Most funds never launch. Most people that go just hire a lawyer never actually launch their fund. They go hire a lawyer, build legal docs, and they go to the market and investors hate it. And they say, this is terrible. I don't want to invest in this. And they're stuck with a $30,000 legal bill to cover their legal docs. Our goal with Black Card and Fund Launch is you come in, yes, we're going to do this as well, but let's build you something amazing. So when I zoom out, you'll see here, this is called the Fund Launch formula. We have, and this is a more complex version of it. Let me go down to the simple version. We're going to focus first on this side. Let's go focus on your deal and strategy, the frame and structure of your fund, and getting verbal commitments to that fund. We're going to do these 3 stages over and over and again until we reach validation, meaning we have validated your fund idea actually is going to raise tons of money and people love it. We're going to go pitch real world investors. Then and only then, we'll go to legal. This is a stage. We'll spend a few weeks here or months here just getting your docs organized. And then we launch. And then post-launch, we go back to the capital markets. We call all the people that you previously pitched over here and say, hey, we're actually running this fund, capital markets. We'll go, buy the assets, we do asset management, and we go and continue to build the firm. We do this in perpetuity. So this is the simple version of the Fund Launch formula. We then have the more complex version here. This is where, so again here, you can see all the sub-frameworks. We're going to work on, okay, what waterfall structure are you using? Are you going to run an open-ended or closed-ended fund? What's your structure? We talked about that a few times today. Who are you going to go market to? High net worth, family offices, or institutions? What's going to be your strategy to go to market? How are you going to get in the room, connect, and close the room? What's your edge in your fund? Are you going to lean into the asset class, the strategy, the team, or the structure? And you can see different breakdowns over here. How are you going to find asymmetrical risk inside of your portfolio? And then what are the roles in your fund? Who's going to be your money raiser, fund manager, and expert investor? We have 3 call spots left. They just updated with me to hit $4 million. So go book a call if you're interested, fundlaunch.com/7K off. So that's what we do in Fund Launch. Okay. And then the legal formation stage, we're going to go into the SEC compliance rules, and then we can pick your type of fund here. And then we'll go to capital markets, build your investment committee, how you're going to make decisions on your investment committee, how you're going to run your firm, go the fund, what you're going to fill out your fund waffle, if you're going to do international feeder fund structures, and you're going to keep doing this. So a lot here. There's a lot that goes into building a fund. It is not easy. Building a fund is not easy, but it's a lot easier with Black Card. It's a lot easier to go do this when you have a team of people behind you that have done this multiple times, that most of our team, as far as coaching staff goes, actually actively run and manage their funds. So again, there's the link. We have 3 call spots left to hit $4 million of credits claimed to Black Card. This all goes away tomorrow at midnight. So you can still join Black Card. You just don't get 7K off. There's not $5,000 to start. Usually it's about $10,000 to start is our typical cost. And a lot of times there's more interest charged on payment plans. So we're doing some cool stuff for people that join by tomorrow. If you want help as well, you can text into this number and we'll send you a link there. I think that number is live on the screen, so you can see it there. Pretty cool, y'all. I like to avoid wasting time and errors looking for investors and stuff. I have the hope to save years doing this with the help of the community to find the right people. Do you help do this? The whole goal of Black Card is to save time. This condenses, this is a lot of stuff. Building a fund is a lot of stuff. We condense all those things, hopefully to save you an immense amount of time and effort and heartache, sometimes doing things wrong. I've made huge mistakes in funds and just putting things together or having a wrong partner or a third party, group that I'm using. I've had to change them. We have done a lot of that. You can learn from our mistakes and the mistakes of 1,000+ members in Black Card. We're launching about a 1 to 2 funds per week, every single week for the past 1.5 years, 2 years, something like that. So we do this every single day. Starting a hedge fund, can I borrow money from friends and family to invest and get some AUM before I'm fully set up as a fund? What I would say, Steve, this is Steve Borkman. Again, you can do that. You might be violating securities laws, but you can do that. What I tell people to do is, if you're really serious about moving on this, a lot of people are like, hey, I'm a trader. Your family member's like, hey, can you go trade $50,000 for me? And a lot of guys say, yeah, sure, just send me the money, and you just have a mutual agreement between you and your brother-in-law. A more structured way to do that would be setting up an actual hedge fund or a hedge fund incubator. And we do these in Black Card. So an incubator is where you, and these are the reason, so a full hedge fund will cost you, let's just call it 30 grand to set up a full hedge fund. A hedge fund incubator is something like, 5,000 to 7,000 to set up. Much easier, much more simple. What you do is you set up a general partner, a management company, a limited partnership, but you don't have limited partners or investors. You don't have an LPA and PPM. What you do have is your brother-in-law wants to give you money. They come into the general partner, and you give them a stake in the general partner. You give them 10% of the general partner. And you have another friend that wants to give you money. You give them another 10% of the general partner. And then the general partner contributes capital into the limited partnership. That's how that works. We set these up a lot. And then what happens, this allows you to build a track record inside of a fund structure. And you can actually get audits done on this. The problem with a lot of traders is they're like, hey, I've been trading since 2015, 10 years, and look at my track record. I've got this, and this, and this, and all these great trades, and man, we crushed it. And a smart investor goes, okay. And you go, yeah, look at my personal brokerage account. Yeah, and last year we got a 32%. The year before that we got 55. We're just killing it. And he goes, okay, how do I know you're not cherry picking? How do I know that you don't have 30 brokerage accounts and you're just showing me the best one of the 30 and the other 29 lost money? That's a real question that and they go, and also you've never managed other people's money. It's a big difference when you're trading with your own money versus other people's money. In a hedge fund incubator, you go, hold on, wait. No, we have a fund set up, and we've gotten audited reports done, and I've actually managed other people's money through this, and we did a hedge fund incubator. And they go, it gives a little more credibility to what you've built as a manager. And it allows, and then down the road, you can transition your incubator to a full out hedge fund. Now, it's not going to save you much money. Like, you're going to spend another 30 grand setting this up, but it's a stepping stone to get in. So, Steven, hopefully that's helpful. Yeah, good question. Good questions, y'all. All right, 3 spots left. 3 spots. I don't want to end the call just right below 4 million. We're about to close up the call, but I almost want to hit 4 million just to hit 4 million. So if you're on the fence, if you have more questions, you want to talk to our team, there's that link just has you book a call. When you book your call, it actually, to your email, it claims the 7K off offer to your email. That's how that works. And so that's how we're calculating up to $4 million of people that have booked calls. I think we've booked, do you know how many calls, Christian? Is it 400 at this point? It's got to be over 400 if we're doing the math. We've had a number of people join Black Card this week already, and welcome in brand new people. But 400. Wow. So we've had 454, you said, people book calls already in the last 2 weeks since we opened this up. Book calls. 3 more. 3 more gets us to 4 million. So if you're on the fence, or just do it for me maybe, but don't no-show your call too. Make sure to show up for your call. But 3 more gets us. So if we get to 457, that'll put us to $4 million of credits claimed on Black Card from this promotion. So there you go. Hit that link down below. I think it's Adam Smith booked on there. Jay Miller booked a call done. That's awesome. There we go, Jay. Oh, we booked another one. Okay, there's only 2 left now. 2 left. 2 left now. We'll hit one more here. So you said that the GP only structure is 7K. Black Card promo. Is there a discount till Friday on top of that? Yeah, Max, good. The GP only structure. Oh yeah, the incubator. This is a different product. This is called essentially just our hedge fund incubator product. It's only about 5 to 7 grand. We can work something out. It's not going to be 7 grand off, then it would be free to do this. But 7K off is for the full, if you're doing the full hedge fund. So if you're 30 grand, that would be like, 23 grand. But we can work something out for this before tomorrow night. So yeah, book a call. It's the same team that would help you. So yeah, if you're curious about that, Max, I would book a call and just see what we can do. We can make something happen for you before tomorrow. But tomorrow it goes away. Frank just booked a call. We are one left. Is that right? Wait, is the tracker updated? Oh, you got to update it? Okay, he's got to update it. The tracker's getting updated right now. We are at one call left to hit 4 million. If you guys just leave me hanging here, I don't know what's going to happen. Can we have confetti go off when we hit 4? Briggs, make it happen. I'm just requesting it now as we're right before hitting it. No, don't be too crazy. Yeah, Frank, there you go. Thanks for the shout out. That's awesome. Okay, let's hit other questions here. Access to fund launch. I think we hit that question already. Make it happen, people. I love it. Let me zoom up. I'm going to scroll up here. I want a fund, a private equity buyout bond fund with a 10% junk bond fee, 8% LP, 2% GP to buy out, invest in failing companies at discounted rates. Okay. I think that could work. So Chris, a private equity buyout bond fund. Are you buying? You're buying with 10% junk bond fee charge. Who's getting the fees? Is to like a broker, and you're buying just the bonds. You're not buying the company. You're buying the bonds of the company. Yeah, that could work. I think that could work. It'd probably be under it depends if you're buying the actual bonds. You'd probably be a hedge fund structure. If you're coming in and actually buying the equity, you would be a private equity. So is it a private transaction or a public transaction, I guess is the question. But yes, the answer is yes. It'd either be a private equity fund or a hedge fund. But yes, those would be there. I just got an Adam Smith said, Jim is him. Jim hit it. We hit it. Wow. There we go. I don't know, virtual confetti. Somehow, I don't know if we can do that on Zoom, but drop an emoji. That's actually crazy. We did not time that. Like, that was not manufactured. This is actually true that we hit now 147 booked calls. Well done, everybody. Well done. That's actually pretty cool. Our original goal was 1 million. We hit that very fast. We then jumped it, I think, to 3. We hit that on the first day, and then the last 2 weeks, we now are at $4 million of credits taken. That's pretty cool. So congrats to y'all, to everybody. That's amazing. They're still coming in. Oh, there's a few more. Jim hit it. We're going over now? Oh, shoot. Someone else booked. So now we got $7,000 more. Well done. Again, tomorrow night is the deadline. This is the offer and the 7K off. We help people do this every single day. So we do funds day in and day out. Again, this can be pretty fun to join. We've never done a discount like this before. It's not common to do even promotions like this for Black Card. Typically, we only do this once a year. The last one we did was a year ago for Black Friday. So this doesn't come around often. This is what we're doing. So go talk to our team. We'll get you figured out there. And thanks you guys for dropping the emojis. Kind of cool, a little virtual having fun. We'll hit I got another question here. The question is, should I start a fund through you to launch a fund on the side, raise crowdfunding for a small amount, or quit my job and look to set up my fund in Dubai? The background is that I have a decent job and bills to pay as I'm guardian of family as a single earner. My contacts are mostly in Dubai, but I don't have experience in funds. It depends on, I guess, you're asking, should I set it up in the United States or in Dubai? It depends on where your people are at. So if you're, I got my little map here. Here's my map. So if you're over in Dubai, so in the US, we're very good at US funds. We still can do Dubai funds. It's a larger charge, and you can talk to our team members and see if that's worth it to you to do a fund in Dubai. I believe Dubai is right over here, right? I went there a few years ago. It was a really cool place. Dubai was awesome. So if your contacts are here, you might want to set it up there. Now the question is, where are you investing? If you're investing into the United States, you might just want to set up a US fund to begin with. If you're investing into Africa, then that would probably just stay here if all your investors are there. If you're going to be in Europe, you might want to stay. Jurisdiction changes. Every time you cross a border, you now have to comply with the regulatory bodies of now both countries. So it depends. That's why it becomes very expensive when you cross borders. So that comes down to you of where your investors are at and what you're investing into. But if you're, for example, a lot of people go here and they're doing crypto. So if you're doing like a crypto fund, which is international, and all your investors are in Dubai, then I would agree with you. I would set up my fund in Dubai. I would live in Dubai, and I think there's zero capital gains on crypto. I would probably do that and have my investors in Dubai. Yeah. And you can talk to our team. We may or may not be able to help you with that. There might be other people better than us on a crypto Dubai fund. So you might want to, go over there. We're very good at U.S. funds. We have a lot of Canada clients as well. We have some Australian and UK clients. We have some Dubai clients as well. But usually the Dubai clients they're somewhat interacting with North America. They're either getting money out of North America or whatever. So yeah, pretty cool. Well done. We're at 4 million. Wow, we're at 4,020,000 now. Jeez, that's awesome. You can drop their names in the chat and feel free to update the tracker there. I don't even know if we can. We have to maybe rejig it. Thanks so much, y'all. Leave my job and use your accelerator. Should I leave my job or not? That is up to you. What you can do as well is Black Card, we give you time. The original program is a year. When you join by tomorrow, it's 13 and a half months. You can even keep your job, keep earning money while you start building this and thinking through it on the side. And then once your fund is ready to go, then you make the leap. A lot of people do that. That's a personal decision, but so up to you. But we have a lot of people that join Black Card while they're doing their job. And they're building this engine because funds do take some time to set up. It just does. It takes time to file and get investors interested and build your pitch deck and think through your strategy and do all the stuff that we do here. It does take time. You can do that while you have a job. And then once you're ready, and by ready, it's usually when you've received validation. You're like, okay, yeah, we've got 10 million lined up here that wants to come in. They're not just kind of want to come in. They really want to come in. We're going to set the legal. Legal sometimes takes anywhere from 8 to 12 weeks, depending on what you're doing. And then we launch, and maybe at that point, you're like, okay, I'm quitting my job. I'm all in. We're going after this. There you go. That's how it could do. Peruse, Ellen, Devin, and Jim just booked calls. That's awesome. Put us past $4 million. That's so cool. Really, that's actually crazy. That's really actually crazy. So well done, y'all. That was actually, we set that goal. We're like, we should hit this. Anyways, that's crazy.
435 total calls.
Oh, 435 total calls. Okay, put it up there. Well done. 400. Wow, that's crazy. So tomorrow should be a big day. I know a lot of people wanted to come on today's call, get questions answered, which is great. By the way, if you missed before this, if you didn't show up on time or whatever, that's totally fine. Go to our YouTube channel here, and you can actually see the replay. So if you go to YouTube, on my iPad here. YouTube. Golly. I don't use an iPad very much. All right, here we go. It's hard to type on iPad. So you go to Bridger Pennington on YouTube, you can actually see this. It might be infinity here. Sometimes this wigs out, though. There we are. We're live. If you want to see the replay, you can just go hit our little live button there. You can actually go back to the beginning of this call and see it from the beginning. All right, y'all. You guys are amazing. Thanks for coming on. People on Zoom and other spots. We're going to hop off. We'll leave this live. My team can chat with you if you have a few more minutes if you're on Zoom. So we'll leave this live for a second, but y'all are amazing. Tomorrow's the closeout. I'll see you guys by tomorrow. Talk to my team. They're in my office. I keep pointing this way because a lot of them are in my office. They send me messages. I can answer questions more directly if you have something private, if you need help with stuff. But it's a fun time to be a fund manager right now. There's a lot of opportunity. There's a lot of things to make it happen in whatever market you're in. So y'all are amazing. Hopefully we can help you out in your journey as well. Thank you so much, and we'll see you later. Bye-bye.